This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about that ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Tom Keene off again today. Not to worry, Damian Sassower.
That would be me.
In the house for the next 3 hours. We appreciate getting some of his time. Jay Hatfield, he's kind of a smart guy. I don't know. I mean, he seems pretty smart to me, but he's raising his S&P target to 7,500 for next year. I mean, I don't know where that comes out, but we'll play with that. We'll see how that's going on. We're going to talk to a lot of smart people here. Quincy Crosby, Chief Global Strategist at LPL Financial. Get her thoughts on the dollar's climb and where we go from here. Martha Norton, Chief Investment Strategist at Empower, talks about how the Trump trades affected small caps and the lack of clarity on Trump trade details. So we're going to break that all down coming up in the next 3 hours. That's what you got Damian and myself here, Bloomberg Surveillance. Right now, let's kick it all off. Lisa Mateo, Bloomberg. Lisa, what do you got for us?
You got it. Well, we got futures right now pointing mostly lower. This is after a few milestones. You had the S&P 500 closing above 6,000. Then you had the Dow Jones Industrial average finishing above 44,000. So let's get to futures right now. We have NASDAQ futures down 0.1%, 21 points. Dow futures down 0.1%, 60 points. S&P futures down about 8 points. The bond market back in business after the holiday. Right now, the 2-year yield at 4.31%, up 6 basis points. A yield on the 10-year 4.37%, and that's up 6 basis points. Bitcoin retreating after surging nearly 90,000. Right now, it's down about 1% at around 87,000. A few crypto-linked stocks erasing earlier gains. Coinbase now down about 0.3%, and Robinhood markets down more than 1.5%. Have to get to Home Depot. Its shares up more than 2.5%. It raised its outlook in the latest quarter. Bad weather apparently boosted DIY sales. And AstraZeneca raised its annual forecast thanks to strong demand for its cancer drugs. It also revealed a plan to invest $3.5 billion in the U.S. business by the end of 2026. You have Nissan stock jumped the most in 15 years. Its shares now up 12% after an activist investor took a 2.5% stake. And this just coming across the terminal. Shopify up 3% right now. Third quarter revenue was higher than expected. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower, he's sitting in for Tom Keene. We have no idea where he is.
Where'd he go?
A cafe in Rome or Paris?
It makes sense.
I mean, is that where we
He's such a wannabe. He's trying too hard.
Exactly.
You know, the Trump cabinet appointments are coming fast and furious,
They are,
huh?
right?
I mean, there's been a lot of action overnight. I mean, Marco Rubio, Mike Waltz, we're going to have to talk about all that stuff. But first, I mean, we're going to talk about some inflation, aren't we? And some contrarian opinions in terms of where inflation's going to go with Jay Hatfield here now.
Exactly. Well, we got CPI coming up mañana, then PPI on Thursday. We'll be right there with you. Retail sales on Friday. I'll be focusing a lot on retail sales and get a sense of how the consumer is doing. Tom and I, we're going to be Friday up in Boston.
Spending money, hopefully.
At the Boston Fed. So, yeah, Thursday night in Boston. How much trouble can I get into there? Jay Hatfield joins us. He's the CEO, founder, and portfolio manager at Infrastructure Capital Advisors. Jay, what did you make, or what are you making? How are you thinking about your outlook? We've got a Republican in the White House, Republican Senate, and likely a Republican House. How does that inform your outlook for markets?
Thanks, Paul. It's great to be on. Well, we're much more focused on the corporate tax rate than almost anyone else, either politicians or investors. And the reason for that is that it's really the key driver of growth, not for just the companies, but also for the country as a whole. And you can do the math very simply by applying a pro forma corporate tax rate to earnings and then giving some credit for higher growth, because growth is driven by reinvested earnings. So if there's more earnings, you grow faster. So we are coming up with our 7,500 target. It's 23 times consensus earnings. So you can get on the terminal, that's where we get it, and then adjusted for the new tax rate. And so it sounds perhaps a bit nutty at 7,500, but a lot of people thought our 6,000 target for the S&P was nutty this year, which doesn't look very nutty right now. Maybe too conservative, but not nutty. And so we actually have superior target technology and have been quite accurate, at least during the pandemic.
So Jay, you're talking that you're basically calling the market out here. You're saying their fear of rising inflation is somewhat irrational, and I just want to kind of, for our audience, put some numbers out there. 1 year inflation swaps. That's what the market is projecting average inflation to be in 1 year's time. It's up 22 basis points to 2.7%. You've got the U.S. 1 year inflation swap alone at 2.5%, 5.4% last. I mean, talk to us a little bit about your expectations for inflation under a Trump regime.
Well, we think investors look at way too many data points to predict inflation. If you look at 10 data points to predict inflation and only 2 matter, then you're going to be wrong 80% of the time. So we look at just 2 things, and if you use this since World War II, you would have been the perfect inflation forecaster: money supply and oil prices, both of which are negative for the last year. And it's also important not to confuse.
So disinflationary.
We're at risk of a disinflation right now in our model. In fact, if you adjust the current CPI for shelter, which is miscalculated,
Agreed.
and auto insurance and repair, which is pandemic distorted, we would have 0 inflation. So we're much more bullish about inflation in the market. We think that'll be reflected slowly, not at this CPI. We're projecting an inline CPI at 0.3, but as it unfolds, we think it'll undershoot. We also think that the bond market's ahead of itself. We're going to have rebalancing. So we're projecting, and in fact, implicit in our target is more like a 3.50 to 4% Treasury. So if we're wrong about Treasuries, then our target will be wrong.
Yeah, I think for me, the real risk to that is obviously if something blows up in the Middle East, right? Because if you're right and it's money supply and it's energy prices, oil prices specifically, I think that's the one kind of thing that might derail your 7,500 target on the S&P.
Absolutely, Damian, and that's a great point, because I think everybody's obsessing about the deporting criminals as being inflationary, which I've looked at my Wharton textbooks and I never found that criminals were anti-deflationary, but or the import taxes. But I will give you a case that the Trump policy is inflationary, and that is, it's not discussed so far, but I don't know if you noticed that in the Wall Street Journal they said that Trump had been targeted for assassination by the Iranians. Well, there's a reason for that. He's going to reimpose oil export restrictions, which is inflationary. So that's the inflationary case. I would look at that. But keep in mind that oil is extremely weak right now. It's partly seasonal. So it's not clear that that wouldn't really be effective and drive prices up, but I would watch that, and that is a real concern.
A 23 multiple. That's not what I learned in business school. I don't know where you went to business school, but my business, 23 times earnings? Well,
there's two factors. One I already mentioned, which if we're wrong about the bond market, we're wrong about the multiple. But the other thing that is not in those numbers, so I would say the risk, just like our 6,000 target is to the upside, is there's a ton of dynamic effects that are not reflected there. So if the U.S. goes to a 15% stated corporate tax rate, we're going to be a tax haven. Think of all the capital. It's going to be like Ireland that grows at 6%. Like we're going to have, phony shell companies with employees here. So there's a lot of dynamic deregulations not in our number. There's a lot of positive. When you have a pro-business administration and Congress, there's a lot of dynamic factors that can't get captured. So we think that even 23, and also AI, during AI booms, you typically have overshoot on valuation. So we don't think 23 is crazy by any means.
Well, Paul, remember, Jay may have gone to Wharton, but he was really educated at the school of Steve Allen Cohen at SAC Capital back in the day. And Steve likes to pay $700 billion for baseball players who formerly played for the New York Yankees, or may still again be playing for the New York Yankees. I mean, Jay, talk to us a little bit about some of the things you're seeing here. The dollar is rallying. I mean, copper prices are down. Iron ore is down. Any read through from that?
Well, there continues to be concern about China growth. They're a key consumer of commodities. We're actually more bullish than most about China. They do save 45% of their GDP, which the IMF estimates every 10% is 1.5% of growth. They don't get that because they're wasted on communist projects, but over time they will have pretty strong growth. So we're actually bullish on commodities. We do think oil prices will come off these lows. But I think that a lot of the weakness you're seeing there is, as you indicated, the dollar, but also some concerns about China.
Small caps? Can we play those here?
We like small caps. We have a small cap fund, SCAP. what a lot of people miss about that is you're really mostly, they are cheap, but you're getting a consolidation play, but also you're getting non-tech exposure. So small caps are only 10% tech. So you're getting a lot of financials. We love financials, particularly investment banks. In fact, we're carrying earnings estimates 30% above consensus for Goldman Sachs, but there's a lot of small investment banks in the small cap index. So it's a way to bet on kind of the non-tech sectors in the market.
All right, very good. Great stuff. As always, Jay Hatfield, he's the CEO. He's the founder, portfolio manager, infrastructure at Capital Advisors. I'm looking at oil here, $68 a barrel.
Pretty weak.
I filled up the vehicle here. $2.70 a barrel.
Wow.
I mean, a gallon. Down at the BP station on Route 35 in Wall Township.
Well, I mean, quickly for our audience, I mean, the Bloomberg Commodities Index is now down 1.7% year to date. It was kind of up small going into the election, and most of that is gold and copper. Crude really hasn't done much. It's down 3.4% year to date, Paul. So you're right. I mean, it's a little bit easier for us at the pump, but just how long could it last?
Yeah, exactly. I mean, I think we had that geopolitical risk come into the price of oil, shot it up here, but it's kind of bled off here. So we'll take a look at that. With our news in New York City, here's John Tucker.
All right, Paul and Damian, President-elect Trump continues moving quickly to fill in key positions for a second term. Bloomberg has learned Trump will appoint Marco Rubio as Secretary of State and Florida Representative Mike Waltz as National Security Advisor. Both men have track records of harshly criticizing China. Let's get more from Bloomberg editor Bill Ferries.
Mike Waltz, he's a congressman from Florida, former Green Beret and veteran of the Afghan War. Definitely a hawk on things like China and U.S. military policy in places like the Middle East. Then you have Marco Rubio, is well known on foreign policy circles for his focus on Latin America, places like Venezuela and Cuba, partly because he's from Miami. But he is very much a hawk on China as well.
Bloomberg's Bill Ferry says Trump's picks give some indication of the direction of his next term after the Republican campaign on threats to impose a 60% blanket tariff on Chinese products. The president-elect also tapping a loyalist to fill out his team focused on securing the border and carrying out mass deportation. CNN reporting Trump will name South Dakota Governor Kristi Noem to lead the Department of Homeland Security. Noem will join border czar Tom Homan and immigration hardliner Stephen Miller when Trump takes office in January. And meantime, the last race left to be called in the Senate is complete. Democrat Ruben Gallego defeated Republican Kari Lake for an open seat in Arizona. That puts the final count in the Senate at 53 Republicans and 47 Democrats. And here's one for you. Costco forced to recall nearly 80,000 pounds of butter because the label failed to mention that the kitchen staple contains milk. Packages for both the salted and unsalted Kirkland signature sweet cream butter list cream as an ingredient, but don't include an allergy warning that the butter contains milk.
Nice.
Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Damian and Paul.
John Tucker, thank you so much. We appreciate it. Bitcoin, 87,800.
Wow.
I mean,
unbelievable.
I mean, it was 60,000 forever.
I know.
And then what a rip there for the Bitcoin. I think it's Tom Keene sitting there on the Upper East Side balcony, just kind of trading crypto off the phone, kicking feet up with the various vet bills and things like that, kennel fees all around. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling after the main stock averages closed at new highs. Bank of America's monthly global fund manager survey shows that positive sentiment, well, it surged after the election, taking U.S. equity positioning to an 11-year high. Let's get to futures right now. We'll start with NASDAQ futures. Little change, down about 17 points. Dow futures down 47 points. S&P futures down 7. We have the 2-year yield at 4.32%. That's up 6 basis points. The yield on the 10-year, 4.36%. And that's up 6 basis points. To commodities, we have Brent crude up about 0.2%, $72 a barrel. WTI crude, $68 a barrel. And this comes after OPEC cut its oil demand growth forecast for this year and next for a 4th month in a row. That was due to a slowdown in top consumer China. Over to Bayer, shares plunged to the lowest in 2 decades. It's now down about 11% in Germany, and this is after the company cut its profit outlook for the year. Also said earnings will probably fall in 2025. Shares of Ticketmaster owner and concert promoter Live Nation, they're up 5%. It says people, well, they just spent more on tickets, on food, band merchandise at its shows last quarter. And finally, SoftBank. It swung to a profit that was thanks to successful Indian IPOs, but now its shares in Japan, they're lower. They're down about 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Damian.
All right, Lisa, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. What would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. Visit youtube.com/Bloomberg Podcast and click the link on our profile or community section to take the survey, which is hosted by our partners over there at Material. Fill it out now at youtube.com/Bloomberg Podcast. I don't know about you, Damian. I can sit in a 2-year treasury. My government's going to pay me 4.31%. I don't need to be a hero. I can just sit there.
Yeah, and all the upside risk at the back end of the curve, right? I mean, that's really the risk here. I think, the fact that you see, break-evens widening, you see real yields bouncing back here. I'm talking 10-year real yields now breaking above or just about 2%. So, yeah, no, I mean, this is all kind of pointing to a 10-year at 434 last on a nominal basis, looking perhaps a bit rich.
But if you're a senior fixed income strategist at UBS Financial Services like Leslie Falconio, you probably got to be a little bit more creative than just sitting in a 2-year treasury. Leslie joins us here. Leslie, thank you so much for joining us here. How are you thinking about kind of just opportunities in fixed income, how investors should be positioned here? Because, again, I can sit in a 2-year treasury at 4.3%. Do I need to take credit risk? Where do I need to go?
Well, listen, I think you make a very valid point. And, one of the things that we are looking to do is lock in that yield, lock in that carry, get that compounding income. And you don't have to go far out the yield curve to do that. And by the way, we aren't going far out, and we wouldn't recommend going far out the yield curve. We're actually sticking with that 1 to 5 year area of the curve with probably, an average leverage duration around 4.5, 5 years. We like that belly. But to your point, we're not really interested in going into lower credit quality here. Like things like, high yield that's at, 263 and at its tightest level since, 2007. We just don't feel the need to go down the credit quality. So we are staying with the higher quality spectrum, but we're doing that in terms of, locking in yield in IG corporates, locking in yield in agency MBS, but not necessarily going far out to that 10 plus area of the yield curve,
right? Because
we do think the yield curve is going to steepen going forward.
But Leslie, by far the best performance this year in fixed income has been U.S. corporate high yield. The Bloomberg index is up 8.28%. Don't I have to take some credit risk there?
I think it's great to have a diversified portfolio. But remember, the thing about the high yield index too is that duration has really shortened. It's only around a 3-year right now, so you're not taking a lot of interest rate risk with high yield. But here's the thing: at a 260, 263, and having the triple Cs, the lowest sort of spectrum within the high yield universe, tighten in over 300 basis points in a month and a half. They're really not pricing in any left tail risk. So when you think about how much this is compressed, we just don't think it's worth that kind of risk at this point because you are earning carry and you are earning a lot of compounding income from higher quality right now as well.
Well, Leslie, as a former hedge fund PM for Ken Tropin at Graham and George Soros at Soros Fund Management, this is awfully boring. Short in duration, don't take credit risk. I mean, come on, let's get exciting about it.
Yeah. Well, look, how about CLOs? So that's one thing that we
there
like
we
to
go.
do. CLO
Private
side.
credit. Yeah. I mean, is that where we
right.
need to go in order to build a little alpha into our portfolios? Incremental yield? Talk to us.
I will say this, though. You're absolutely right. We do like the private credit side. And, we obviously, private credit, listen, spreads have compressed in public. Margins are compressing. There's no question. But given the fact that the Fed is not as likely to cut as much as we first thought 3 months ago, then we do think really private credit, is what it's important to have that allocation there. So yeah, we absolutely like private credit. And of course, listen, your portfolio should be diversified. So, it's not that we're saying that we don't like high yield at all. We're just kind of neutral them right now. It's not a relative value play that we think has a lot of momentum behind it, except for some of that carry that you're earning. But frankly, most of that carry is earned from the treasury market. So we just don't feel the need to actually take on excessive credit risk right now. But things like private credit, if you're willing to lock up your money a little bit and take that liquidity premium, we think is a great place to be.
Well, Leslie, I see in your note you're looking potentially for the 10-year U.S. Treasury to hit 475 by year end. So let me ask you, how do we get there? Because our last guest, Jay Hatfield, was talking about inflation coming down, yet the market certainly doesn't agree. I mean, if you're looking at inflation swaps and break-evens and all that stuff, we're looking for inflation expectations to rise here, and not only that, real yields appear to be rising here. So talk to us a little bit about, where we go in the U.S. 10-year.
Well, listen, overall into 2025, we actually think the 10-year yield starts to fall because our expectation is the Fed cuts 4 in 2025, not the 2 that the market's currently pricing in. So we do think in 2025 yields will start to come down. But over these next couple months, I mean, you're still going to have, fixed income forward looking, it has a tendency to move on speculation versus fact. And so what we think is going to happen is that as you have like these recent CPI numbers that are going to have base effects and actually push them a little higher, and this nervousness about, policy implementation, without actually knowing what those implementations might be, the fixed income market has a tendency to react to that. So we wouldn't be surprised that in the short term, yields kind of move higher a bit. But let's say we're a buyer on that. We are a buyer on the dip. We think it would be a good time to buy and lock in because we feel that in 2025, interest rates are going to go lower.
Talk to us a little bit about the first 100 days of a Trump administration. You see the cabinet appointments coming fast and furious. You see China hawks, Israel supporters. Talk to us a little bit about geopolitical risk, about a Trump administration. What are your expectations there?
I think the market's priced in a lot of this, Trump trade, if you will, right? And I think that sometimes, and you mentioned inflation expectations, how much they've gone up because of, the tariffs on day one. But look, we really don't know how long the duration will be, what the implementation will be, So I think the market has a tendency to overreact. And I think it's overreact to some of these sort of Trump trades. And remember, when things like tariffs and inflation caused by tariffs, I think Chair Powell made perfectly clear last week that they don't assume and they don't speculate. They're data dependent. So they're not going to actually react just because a tariff is in place, right? They need to see that data. And not only that, but I don't think they're going to move because of the inflation caused by tariff, because they're going to look at this as sort of like a one-time hit. They're going to look through it. Fiscal stimulus and inflation and growth from fiscal stimulus is a different story. But I think, in the short term, the market's going to continue to speculate on what, they take him literally, they take him seriously, but they shouldn't take Trump literally. So I think that the issue is going to be that you're going to constantly have this push and pull about what he's going to do, but you don't actually know. And I think the market right now is getting a little bit ahead of itself in terms of these sort of Trump trades, if you will, and one of them being the rise in inflation expectations.
All right, Leslie, thank you so much for joining us. Leslie Falconio, Senior Fixed Income Strategist, UBS Financial Services. One of the Trump trades is buy the dollar. DXY up again here, Damian.
Yeah,
Tom Keene almost might get parity on his euro the next time he's over in Paris or Rome.
No, look, we had long said that, if you have a red sweep, you're going to see some levels potentially get tested, like 102 in euro dollar, 740 in dollar yuan. Again, it's not going to be a straight line there, but, those are levels that we're looking at very closely.
Yeah, so we'll see here. But again, the DXY index stronger again today against major currencies. The VIX, we'll call out the VIX for Tom, just slightly above 15, but certainly well below the 20, 21, 22 levels we saw just a couple of weeks ago. S&P futures off 8, Dow off 38, and NASDAQ off 26 here in early market, pre-market trading. We're going to have more coming up. This is Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks, well, taking a little bit of a breather. Investors weighing the potential policy impact of President-elect Donald Trump's cabinet picks. Shares of Trump Media and Technology taking a breather, too, down about 4%. We have NASDAQ futures down 0.1%, 29 points. Dow futures down 35 points, and S&P futures down about 8. We have the 2-year yield at 4.31%. That's down up 5 basis points. The yield on the 10-year, 4.36%, and that's up 5 basis points. To currencies, we have the dollar stronger, the Japanese yen, euro, British pound weaker, Bitcoin right now at 87,000, and that's after nearing 90,000. Few companies making news. That's Chipotle. It had announced that Scott Boatwright, he's going to be the new CEO effective immediately. Now, Boatwright, he had been serving as interim since August when Brian Niccol left to become the chief of Starbucks. Southwest Airlines, they're going to be offering voluntary departure packages or extended leaves to airport workers in 18 cities. That's due to aircraft delivery delays that really forced the carrier to trim its flying plans. And finally, Boeing had won an order for as many as 80 737 MAX jets from charter operator Avia. That is your Bloomberg Business Flash. Paul and Damian.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right. When I was working at Salomon Brothers, our London offices were in the city, civilized. We were gentlemen. And then we were acquired by what was Travelers and City.
And then you went to 388 Greenwich.
No, then in London, we went out to Canary Wharf.
Okay.
And there was nothing out there back in the day when we were there. I mean, it was, you had to walk there like uphill both ways.
Not anymore.
There was nothing. Now it's like hopping out there at Canary Wharf. And that's where our next guest is, Beata Mate, equity strategist covering the European markets for Citi out there in Canary Wharf. Beata, give us a sense here for European stocks here. Earnings season. How is it stacking up for the European companies there?
So, hi, good morning, everyone. Great to be here. So the European reporting season has turned out, despite fears of being terrible, turned out to be quite an average reporting season. So the number of companies that are beating expectations is in line with long-term averages. Actually, the dollar amount of earnings is up 6% versus what the analysts have been expecting it. And of course, before the reporting season, we've been noticing huge amount of bearishness towards European equity markets, both from the sentiment and sentiment of positioning perspective, but also from the downgrades and sentiment from the analysts. So we've been noticing that downgrades for European earnings, so upgrades versus downgrades balance, has hit recessionary levels. Of course, it's weird to hear given where the market is trading right now, but what you've got to imagine that underneath the surface, there have been a huge amount of pain for many cyclical European companies. So what we've been noticing, actually, because of this bearish setup beforehand, companies that have been missing their expectations haven't been punished so much, but companies that have come up with the bids have been disproportionately benefited from the upside on their share prices. So bearish expectations to okay reporting season. How about that?
Beata, let's talk a little bit about it, performance at the country level, yeah? So, I mean, we've just got that, that budget release from the UK. I think people are revising up their GDP estimates. We look at Germany, the snap election just got pushed forward from March to February. How does this impact your portfolio, and how does this impact positioning writ large?
So Europe has been a serial underperformer over the past few months. The huge underperformance wave has really started with the French election announcement. So political risks in Europe do feed into the performance of the European equities. That's been, of course, a negative trigger for equities. Then China worries came, huge downgrades for most of the cyclical sectors have come already through around 20% cuts to the earnings levels for both this and next year, meaning a lot of bearishness and downgrades has been already priced in. So what you have to answer, the question you have to answer going forward is what's next for EPS and how much of the bad news is already in the price. So coming back to this negative positioning from the analyst perspective, the net downgrades, they've been at recessionary levels, and historically what they suggest, what they've been suggesting is they've been sending a contrarian buy indicator if your time horizon is 6 to 12 months. Historically, at this level of bearishness, cyclical stocks would have outperformed defensive stocks. So this is where we are right now. Contrarian buy calls on Europe, while earnings could still come under pressure into the next year. So we think the analysts are still a little bit too bullish.
Yada, when you talk to your clients in Europe, what's been the reaction to the U.S. elections here over the past week here?
So, of course, I've listened to the program a bit beforehand. We've had these huge Trump trades, election trades playing out through different macro variables, dollar, treasuries, and of course on the top level of the equity market. And for us, that trade has been overweight the US versus the rest of the world, while within this rest of the world pot, Europe has been one of the most beaten down sectors. So sentiment has been quite subdued. You can see that in the underperformance over the past few months. But what the biggest amount of questions we are getting going forward is what is the macroeconomic setup for the global economy for the next year? Because if we start seeing broadening of earnings expectations, and in Europe, given this underlying pain and many EPS recessions for various cyclical sectors, it's easy to argue that the EPS should start broadening up. Very high valuations in the US. So the questions we are getting is the Trump trade, has it played out? A lot of it has definitely played out. Of course, we still have many uncertainties around how different policies are really going to play out and how much of them we are going to see in place. So that's the uncertainty that is still keeping investors away. But the feedback we are getting is that when there is a time to diversify away from the US, within the rest of the world pot, European equities look like best positioned to benefit from that trend if it comes.
Yeah, so Beata, I'm looking at the Eurostoxx 50 here, and we all know that financials, and look, forgive me, I'm a fixed income guy, so this may be rudimentary of me, but financials are 20% of the index, right? So what you're really looking for there is a steepening of the curve. And right now, I know that the ECB, a lot of people are thinking with the tariffs coming through, they're going to need to cut a little bit more aggressively. Is that something that you believe? And also, you look at concentration risk at the top. ASML is 7% of the index. So talk to us a little bit about the impact of the semiconductor cycle on European equities and their performance looking out, I guess, 1 year.
Of course. So if you look at Stoxx 50, it's a very growthy index, but it's 50 largest companies in Europe, right? So for me, a better benchmark for European performance is Stoxx 600, and then 50% of that is cyclical. Cyclicality likes inflation. And what comes with inflation is a rate cycle, which is beneficiary to the banks and financials performance. So indeed, ECB is going to continue cutting, but our point is that even with all the cuts that we have priced in or forecasted for the next year, it's still the terminal rate is going to be substantially higher in this post-GFC environment. What we argue for European index overall, it is an upgrade. So cyclical markets and very financial oriented markets like cyclicality, and they like the rate cycle. So what would be the worst scenario for Europe is if rates go back to zero, then you just buy the US market and growth and nothing else, right? In terms of semiconductor cycle and the luxury goods, these are the prominent sectors in Eurostoxx 50 sector, one of the largest companies. These sectors have been, the EPS of these sectors has been cut by 20% already for this year. and by 20% for the next year. So the question is there more to come?
Right.
Perhaps tiny bit of downgrades more, but is a lot in the price? Yes.
Beata, thank you so much for joining us. Beata Monte, equity strategist covering the European markets for Citi over there, out there in Canary Wharf in London. With our news in New York City, here's John Tucker.
All right, Paul and Damian, President-elect Donald Trump expected to name Marco Rubio as Secretary of State. Rubio's taken an aggressive stance on China's emergence as an economic power. Let's get more in this report from Bloomberg's Jill Desis.
Rubio has been a pretty enormous China hawk over the last several years. He was actually sanctioned by Beijing over a couple of different matters, whether that be about the Hong Kong protests back in 2019. He also was very outspoken about the Xinjiang region in China and a lot of the U.S. allegations facing Beijing there. So, I mean, this is somebody that definitely China, I think, has bristled against quite a bit.
Bloomberg's Jill Desis. Along with Senator Rubio, President-elect Trump has named another China hawk, Florida Congressman Mike Waltz, to be his national security advisor. And he's tapped another loyalist, South Dakota Governor Kristi Noem, to be his Secretary of Homeland Security. Well, Trump has picked several loyalists from Capitol Hill to fill out the cabinet, and that threatens to cut into Republicans' majority in the House. But the GOP still on track to hold on to Congress once all the votes are counted. As of right now, the Associated Press has called 214 House races for Republicans, 205 for Democrats. It takes 218 to win. Bloomberg's Derek Wallbank is watching those races closely for us.
On the House side, you are looking at a paper-thin majority, no matter how much it shapes up. It looks at this point like Republicans are going to hold the House. My guess right now, if I were counting it up, would be somewhere around 222 seats. The majority is at 218. So that's not too much of a distance.
That's Bloomberg's Derek Wallbank. 215th seat is close to joining the GOP column in Colorado. It's where freshman Democrat Yadira Quivero conceded that race on Sunday. Republicans will win a 216th seat in Washington, where GOP candidates are running against each other. That would leave 14 races that are still undecided. In the upper chamber of Congress, the last race left to be called is complete. Democrat Ruben Gallego defeated Republican Kerry Lake for an open seat in Arizona. That puts the final count in the Senate at 53 Republicans and 47 Democrats. Global news, 24 hours a day, whatever you wanted with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul and Damian.
All right, John Tucker, thank you so much. Lisa Mateo just walked in with her bowl of Captain Crunch. And Cocoa, whatever.
Never.
Much healthier.
Golden grams.
Lisa.
Exactly.
Something
All right.
bland.
It's just, that's what she does. Damian, Brazil's central bank warns of prolonged rate hiking cycle. You got a minute and 20 seconds to tell us why we should care.
Oh, wow. Are you really going to me with this? Well, I mean, look, I haven't really looked today, but I think 300 basis points of tightening is priced in through, at least the end of next year, which is significant when you look at it relative to the rest of the world. The instrument that we use to gauge that is something called a DI future. I'm not going to, kind of tell you exactly what that means when you spell it out. It's a Brazilian Portuguese name, but effectively that's what's being priced in. My LATAM rates senior strategist down in Sao Paulo, Davison Santana, seems to be pretty bulled up. We do. It's a new hire. He's pretty bulled up on the Real, specifically versus the Mex Peso, which, as you can see, has been getting clobbered in the wake of the election. I mean, all EM currencies have. I think only 2 of 21, get this one, 2 of 21 emerging market currencies globally are now up on the year, and those are the Malaysian ringgit and the South African rand. So it's a sea of red out there.
Wow. And why? Is that just the dollar's just bull?
Yeah, it's time to be perfect, Paul. There's only 2 things that are perfect right now. It's the Cleveland Cavaliers at 12-0 and the Kansas City Chiefs at 9-0. The Winnipeg Jets have 1 loss, so you can look at them and say they're near perfect, but emerging markets are far from it.
Very good. All right, we got the futures here. A little bit of red on the screen here. S&P futures off about 6 points. The Dow off 33, and the Nasdaq off 17 points here. 10-year Treasury 4.36% on your U.S. 10-year Treasury. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks pausing their gains over signs of rally as valuations a little bit overextended. Right now, NASDAQ futures, little change, down about 9 points. Dow futures down 34. S&P futures down 5. We have the 2-year yield at 4.31%. That's up 5 basis points. The yield on the 10-year, 4.36%, and that's up 5 basis points. U.S. small business optimism, well, that rose in October. That was the weeks before the election. Now, the index matched the highest reading since early 2022. Tomorrow, we get October's reading on the Consumer Price Index. Thursday, it's on to Producer Price Index, followed by retail sales on Friday. Well, look out, Adidas and Nike have sneaker upstart on. It's raised its outlook for the year, also expanding into sportswear. It's added singer and actress Zendaya as its new brand ambassadors. Shares were up more than 3% right now. Shares up about 0.2%. Tyson Foods, they forecast higher earnings in 2025, a turnaround in the chicken business, rising demand for prepared foods that offset losses in beef. So chicken doing better than beef. Yep. Shares up about 6%. And finally, Dish creditors, they rejected a bond exchange offer on the eve of a deadline for a debt deal. That is key to the company's proposed acquisition by DirecTV. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here on our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. China seen countering Trump tariffs with stimulus, weaker yuan. Give me 30 seconds on China. What are your emerging market clients?
I mean, that is going to be a playbook out of 2016, 17, 18. They're going to weaken the yuan off the back of this. Hence the reason most people are calling for dollar yuan to rise to 740 here. But you're right. I mean, they just aren't stimulating fiscally. They're not putting money in people's pockets. Households are suffering. The property market has structural difficulties. They are kicking the can down the road. Beijing is extending and pretending. There's all this, this 1.2 trillion yuan, kind of break for LGFVs, which are local government finance vehicles, and there's just really big structural problems. Oof. And the yuan's going to weaken off the back of this again. That's bullish for the dollar.
Second biggest economy. There you go.
Yeah.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages around the world is brought to you by IBKR. With the Interactive Brokers Forecast Trader, you can trade your views on key economic and climate indicators. Visit ibkr.com/forecast and get started today. Lisa Mateo, newspapers. What do you got for us?
All right, so you've talked about it, Paul, how people can easily cancel their subscriptions to streaming services. You go online, you do a little click, and it's done. So now the Wall Street Journal is calling this like the new streaming habit. It's the subscription pause. So people are canceling and then coming back. And maybe if, because they had a show that ended, so then they cancel it, and then wait for the next season to start, and they come back and do it. So it's really showing how streaming services really need to deliver these hit shows, films, live events. It's showing this is why the pressure is on for them to do this, so they can keep getting those customers to come back. So quick numbers from Antenna. It says the monthly median percentage of premium streaming video subscribers who rejoined the same service they canceled within the prior year, 34.2% in the first 9 months of 2024, and that was up from 29.8% in 2022. So I don't know if you've done the whole pause situation.
This is I've been looking for. I'm a huge fan of Yellowstone.
Okay.
So I thought I could just go on Paramount, because Paramount does the Yellowstone. Sure. I go into Paramount, it's not there. So I subscribe to it, then I unsubscribe to it 5 minutes later. And then I understand, I Google it. Apparently it's on Peacock, so I go into Peacock, subscribe. They're not there yet. They come later. I don't know how that all works. So
wait, do you get hit every time you subscribe and then unsubscribe? Do you get hit with like a month?
I don't know. I've
subscribed and I've
unsubscribed. So it is a terrible business model compared to what I brought into this world 30 years ago when we were banking all these media companies, and you just paid $100 a month and you got everything you needed.
That's right. That's right. The a la carte, the a la carte approach to some streaming media is definitely taking a bit of a hit here, but I think it's Netflix and everything else. Truthfully,
yes,
I mean, let's be clear. I mean, if you're subscribed to Netflix, you're not canceling that anytime soon. But everything else, I mean, Disney. I haven't seen anything new come out on Disney. Hulu. I mean, well, Hulu's different. I mean, Peacock. You're right. Max. It's hit or miss.
Yeah, it's hit or miss. So I don't know. I mean, I know you control your household with an iron fist.
I do. I've canceled out a lot of. I'm not the return. I just cancel.
Right.
I don't come back.
Exactly. So then, like, Mom, what happened? I thought we were.
Oh,
hey, if
well.
your soldier's out there and you're canceling on him,
Yeah.
you can't get. Oh, that's not
Yep,
good.
yep,
That's
sorry.
not nice.
Hey, he has the YouTube subscription, and he doesn't give me his password.
Okay.
So I'm playing fair game here.
All right, very good. What
All
else
right,
you got?
moving on. Losing your luggage. You know, it's a big pain in the neck. I don't know if it's ever happened to you, but USA Today says this new Apple feature will let you tell the airline exactly where it is. So it's in the latest iOS update. They're expanding the functions of the Find My feature. I don't know if you use it. I use it to track my kids.
Use it all the time.
I track my kids on it. But they're saying that it's expanding it. So now you can share locations with other people, but also third-party vendors. So for example, if you're traveling and you lose your luggage, you can share that location if you have an AirTag on it with the airline.
Where do you get an AirTag, right?
An AirTag, yes.
Okay.
I
So you
have
can
like
share
20
it.
AirTags in my house.
You do?
I put AirTags in every piece of luggage every time we travel. I actually look when I'm in the plane to make sure that the bags, which are still at the terminal on the plane, I mean, you have to. How do you not? I mean, this has happened to me many times, by the way, where I've lost my luggage. So, I mean, I'm scarred for it.
I
but
haven't
I mean,
checked a bag of luggage in 30 years.
yeah, I mean, I'll throw it on. I'll throw it on my daughter's shoelace just on the way to school to see where she's going. Yeah, I mean, I do it. I use those AirTags.
Pop
all
it
the
in your
time.
wife's bag.
That's
Okay,
exactly-
secret.
I
I
didn't say
see
that.
how
You
work,
said that. I
Damian.
didn't say that.
But it does.
Interesting.
It
AirTags,
could
all
be
right.
helpful. It could
All
be
right.
helpful. Okay, so Chipotle shareholders. This is because of the skimping on the portion sizes. Remember that whole fiasco that happened? Okay, so shareholders now suing the company because they're saying the stock was affected because they weren't so open about how many places this was affecting. So they're saying it forced them to spend more on ingredients, hurt the stock price. So they're saying they realized the claims because people began complaining on social media, posting about the skimping on the portion sizes. So
All right.
according to the complaint, I mean, this is what's happening. So I don't know.
All right, here's what's. I'm a Chipotle guy.
Yes,
and
me
what's,
too.
What's today? What's today?
Tuesday.
All right, tomorrow's my Chipotle day. I used to get 3 beef hard tacos with chicken.
Okay.
And then they got crazy and started overfilling them because of the social media backlash. I think the word came down. We're getting a lot of grief for underfilling our tacos and whatever. Overfill them now. So now I only get 2 versus 3.
Where's
So
the beef?
Oh.
You remember that?
Yeah,
Where's the
where's the
beef?
beef?
I mean,
Wendy's.
are we there again? I mean, this
Yeah.
is Wendy's "Where's the beef" moment all over again.
I tell you,
It's
Chipotle's are good stuff.
I always thought that they overfilled it because you get the bowl and it's like weighs like 10 pounds. But okay, but yeah. So now there's a lawsuit in the works. So they
great.
got a lot
Figure
going on.
Shareholders aren't happy.
Lastly, I don't know if you ever tried the 23andMe, like those DNA
Yeah.
testing things. So if you ever have, the company's been struggling, right? So now it's saying it's laying off 40% of its workforce, more than 200 people. Restructuring, they said, would save the company $35 million annually, and it's coming from its drug development arm. That's what they're going to be closing down. But the CEO has been looking to take the company private, and it's been unprofitable. People take the DNA test once, and that's all they kind of really need to do. Have you tried it, Damian?
I've not tried it.
me neither.
I mean, this isn't where it tells you what your lineage
ancestry,
is. Yes, it
yes,
is. Okay,
yes,
my
yes.
wife did it. I don't want to give you the results. I was a little bit shocked. I thought I was marrying somebody completely different than who she really was. But look, I trust 23andMe, and their results are probably, I mean, I'm sure
Why do you
that's not
trust
the
them?
issue. Oh, I don't know. I'm a trusting kind of guy. Look, let's go back to the fact. I'm just getting a note in here from some of our listeners. There's a few other, things out there that are perfect, right? I mean, you could talk about, college sports. You could talk about Oregon, Indiana, BYU, Army.
Yep.
They're all perfect. But the interesting story here, Fordham Water Polo. Now 28-0. Wow.
Yes.
Fordham Water Polo.
There was
That
an
is
article in
perfection.
them, yes.
I'm sorry, I just had to deviate there. It's really, really important. One of my listeners is a big Fordham Water Polo fan.
But you think it should be California, right? Isn't California like the king of like water polo? But Fordham?
Not anymore. Welcome to New York City.
Fordham Rams. All right, that is our newspaper segment for today with Lisa Mateo. We appreciate it. Where do you find Fordham?
You'd have to ask my listener here. Actually, I did spend a couple years at Fordham. I took a few classes there in business before I actually graduated business school at NYU Stern, but I did do a little stint there.
Well,
at Fordham
the broadcasting industry is
Huge.
replete with Fordham grads,
Absolutely.
Syracuse grads.
It's a great campus.
Yeah,
I mean, I love it.
Fordham.
West Side,
Yeah,
it's beautiful up there.
Exactly, it's awesome. Oh, who's a Fordham? Ken Fallio, Fordham guy. That explains a lot. Our
right?
global technical director. Half the New York City radio industry is, I think, Fordham. So some good folks coming out of there. All
got good
right, we're gonna have
music
more
taste.
coming up, folks.
Oh, good tune.
Jesse's Girl.
Yeah.
and she's watching him with those eyes. And she's loving with that body, I just know it. And he's holding her in his arms late at night. You know, I wish that I had Jesse's girl. I wish that I had Jesse's girl. Where can I find a woman like that?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here on the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, Quincy Crosby, Chief Global Strategist at LPL Financial. She's going to talk about the dollar's climb and sectors she expects will perform well. Kaur Schleif, CIO at BMO Family Office, on the marketplace discounting a Trump victory. Then we're going to go over to London, check in with our good friend Kriti Gupta, host of Bloomberg TV and Radio, on the global Trump trade. And we'll talk about Bitcoin. I think this just continues to rip, so we'll get some latest thoughts on that. Bloomberg Surveillance today is brought to you by Cohn Resnick. Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. So all that coming up. Let's check in with Lisa Mateo and get a Bloomberg Business Flash.
You got it. And we got futures edging lower after 5 days of gains for the S&P 500. We'll start there with the S&P futures down 9 points. We have Dow futures down 58 points, NASDAQ futures down 32. The bond market back in business after the holiday. We have the 2-year yield 4.31%, up 6 basis points. The yield on the 10-year 4.37%, and that's up 6 basis points. Bitcoin kind of retreating after surging near 90,000. It's now at 86,121, down about 2%. Crypto-linked stocks also erasing earlier gains, like MicroStrategy down about 0.5%, Coinbase and Robinhood markets down more than 2%. We have shares of Home Depot up more than 1%. It raised its outlook the latest quarter. Bad weather actually helped boost DIY sales. AstraZeneca, they raised its annual forecast thanks to strong demand for its cancer drugs. It also revealed a plan to invest $3.5 billion in U.S. businesses by the end of 2026. And finally, Nissan. Stock jumped the most in 15 years. Shares now up about 12% in Japan. This is after an activist investor took a 2.5% stake. That is a Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. We have no idea where he is, but I think he'll be back tomorrow. That is the latest reporting. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to that internet thing, and you go to youtube.com, search Bloomberg Podcast, and that's where you will find us. The markets have just been ripping, Damian. The risk on sentiment since the election has been palpable across a variety of asset classes here.
No, that's absolutely true. I mean, certainly it's been the equity beta, those with the biggest link to U.S. equities that have performed best, but the dollar as well, and but bonds are kind of taking it on the chin a little bit here, sure.
Yep, and Bitcoin, when we got to just about 90,000 earlier in the session, we're now at 80, just below 86,000 on Bitcoin. But that thing's gone from where it had been trading for the longest time, around $50,000, $60,000. Then it just kind of ripped right up to about $90,000. So just a big risk on look at these marketplaces. Where do we go from here? Let's check in with a professional. Quincy Crosby. She is the chief global strategist for LPL Financial. Quincy, I'd love to just ask you to step back, maybe 30,000-foot view of kind of maybe how your view of these markets may have changed when we woke up Wednesday morning with this election result.
Well, obviously, it's dramatic. It was a record in terms of the election day or the day after the election record of how great the market feels about a Trump victory. It's a pro-business, pro-growth strategy, and the market is rejoicing in that. I mean, you could see it almost every day. Perhaps today we have a pullback, but nonetheless, there is a sense that the economy is going to, grow from here. Although, when we look at the markets, we have to accept the fact that how much growth do you really want? Do you want to incite inflation again? And one of the reasons the dollar is so strong, it's not just because the money's pouring into the U.S. It's also that the currency market actually is wondering whether or not the Fed is going to have to be a bit more stringent in terms of its rate cutting cycle.
Quincy, I have to ask you, I mean, look, these cabinet appointments are coming fast and furious, and they seem to really, at least initially, be focused on, areas of defense. National Security Advisor Mike Waltz, Secretary of Homeland Security Kristi Noem. Talk to us a little bit about your call that defense spending is going to pick up. Does that really benefit the defense and aerospace industry here in the U.S.?
Well, it certainly should. I mean, you take a look, and something that's, I find fascinating is that every time there is a headline, even potential ceasefire in the Middle East, chatter that perhaps you can force a negotiated settlement with Ukraine and Russia, defense stocks come down. I mean, it's almost clockwork that the hedge funds or the quants just bring it right back down. But the fact is that we'll probably see a pickup in spending with, the Republicans with a clean sweep. We've seen defense spending picking up, but certainly not enough. The U.S. has got to rebuild its arsenals. There is no doubt about that. And President Trump is already making it very clear. You want to deal with us? You are going to pick up your own defense spending. There's a deal supposedly work with Taiwan. It's going to really get Beijing crazy. If it is the F-35s, for example, and the Aegis destroyers. But nonetheless, the Trump administration appears to be adamant about this. We are not going to fund every country, and you're going to have to do it yourselves. So this is going to pick up. They're going to buy in Europe, obviously, but they're also going to buy from Lockheed Martin, for example. And we should see a pickup. Even if it's just for the U.S., we have to see a pickup in defense spending.
Well, I mean, the reason I ask, obviously, Quincy, is we see that the S&P defense and aerospace sector is up 5.5% since the election. It's up 21% year to date. I'm just thinking just how much is left in the kitty, so to speak. But, it's not just about defense and aerospace. It's about sort of what this means for the U.S. economy, what a Trump administration means, and what some of these appointments mean. I mean, have you any thoughts here in the early going?
Well, yeah, I mean, I'm waiting to hear who's going to be the Treasury Secretary, because, you've got a situation in which the market is worried about tariffs. It's worried about the 10-year Treasury yield climbing higher. You need somebody there who understands the economic backdrop, but also understands how it works in terms of, especially with a horrible deficit, both the budget deficit and also the larger deficit. The other thing is they've got to be cognizant of the fact that you're going to have midterm elections. And I'll tell you this, that if those yields in the 10-year are climbing higher, you are going to see mortgage rates obviously much higher. You're going to see consumer sentiment coming down. That's not something that they want to see. So it has to be someone who understands the connections between the Treasury market and the rest of America that has been rejoicing in this victory.
So, Quincy, what changed for you, if anything, Wednesday morning waking up with this new political reality?
It was the strength of the Trump victory. It was almost a clean sweep. You could see that we're probably four votes on the House, and it was the popular vote. It was across the board. It was confirmation that, even if you're a Democrat or you're Trump, never Trumper, you can't deny the appeal for Trump and his platform. That was amazing.
And does that inform your investment? Did that change your investment outlook at all?
Well, it's interesting because we have been looking at financials. We had been looking at industrials. That has been two of the areas that we liked. And we think that now it's just accentuated. It's underpinned by a sense that the quote unquote animal spirits will be back. The big banks, the money center banks are going to continue with M&A activity, which is very profitable. The IPO market, should pick up finally. And also with that, we should see the framework, the regulatory framework ease. We have too many small to mid-sized banks in this country. We need to see consolidation. I think you're going to see it here.
Interesting. All right, Quincy, thank you so much for joining us. As always, Quincy Crosby. She is the Chief Global Strategist at LPL Financial. That's a NASDAQ-traded company. LPLA is the ticker for your Bloomberg terminal. With our news in New York City, here's Mr. John Tucker.
Hi, Paul and Damian. President-elect Trump has named Marco Rubio to be his Secretary of State. And Bloomberg's Jody Schneider reports the Florida senator is something of a surprise choice.
He and Donald Trump have famously, tussled in the past when they were on that debate stage in 2016 together. And also, Marco Rubio hasn't always, supported him, but he has in recent years. And of course, being a loyalist is hugely important to the former and soon-to-be president again.
Bloomberg's Jody Schneider reporting from the nation's capital. President-elect Trump plans to name South Dakota Governor Kristi Noem to be Secretary of Homeland Security. Trump is rewarding loyalists with cabinet positions 1 week after the election. And the president-elect has picked several sitting members of Congress to fill out his cabinet, but Republicans still on track to hold on to a razor-thin majority in the House. So far, the Associated Press has called 214 races for the GOP and 205 for the Democrats. A 215th seat in Colorado could be heading for the Republicans' way, and a 216th race in Washington State is only being contested by Republicans, so at least 14 races left to be decided. 218 seats are needed to win the majority. German Chancellor Olaf Scholz, Social Democrats and opposition lawmakers reached an agreement to hold an early federal election on February 23rd. Europe's largest economy was plunged into political uncertainty last week after Scholz fired the finance minister, Christian Lindner, of the Free Democratic Party. That broke up the governing coalition in a dispute over borrowing money to boost military support for Ukraine. Workers who went to the office in 10 of the largest U.S. business districts fell to 49.7% of pre-COVID-19 levels last week. The figures rely on security swipes at 2,600 office buildings in the top 10 cities. The Philadelphia Camden metro area was lowest. The Houston metro area was highest. Well, we're days away from Thanksgiving, that delicious dinner, so get ready to break out the cash. According to Wallet Hub, Americans spend $1.2 billion on turkeys for the holiday. And it's a surprising expense, maybe not so much if cooking's not your thing. Fires related to Thanksgiving Day. Residential fires cost $26 million of property loss each Thanksgiving. Be careful and call the Butterball hotline if you.
Where's the crackling fire sound?
Oh yeah, yesterday that was such a
Anyway.
Smoldering.
I know a lot of people who deep fry their turkeys, and that can be a
That's a little
dangerous
dangerous.
adventure. So always do that outside.
What's it
Do
called?
you
A
cook
turducken?
Thanksgiving?
A turducken? Like they put a duck in a turkey and I don't even know.
Turduncan.
Well, no,
Turduncan, yeah. all
Yeah,
that
whatever. But I mean,
fry that thing.
Deep frying.
Yum.
It's delicious.
Do you make Thanksgiving dinner?
No, I order out.
You do? I can see you
have
making it,
catered.
though.
Chinese.
Now, here's what you do. You invite everybody who can cook, and they bring a dish, including the turkey. So I
There you go.
provide, the table in the house. So anyway.
A box of wine, you're all set to go.
A little classier than that, Paul. Global news 24 hours a day, whenever you want to with Bloomberg News Now. I'm John Tucker. This is Bloomberg Lisa, Paul Damian.
All right, John Tucker, thank you so much. We appreciate it.
I can see John showing off his woodworking skills during Thanksgiving.
Exactly.
Right? Like he has like a whole.
No, it's some of my furniture. Yes, is hand built, including a beautiful cherry rocking chair
Of
by
course,
the fireplace.
by the crackling fireplace. Which
What is so funny about that?
No, it's right on plan. Right on
Yeah, it's
plan there for
perfect.
John
It's
Tucker.
just perfect.
All right, S&P futures -7, down -58. NASDAQ -17. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures falling, and this is after the main stock averages closed at new highs. Right now, NASDAQ futures and Dow and S&P futures all down 0.1%, but we have NASDAQ futures down 24 points, Dow futures down 58, S&P futures down 10. The two-year yield at 4.32%, that's up 6 basis points. The yield on the 10-year 4.37%, and that's up about 6 basis points. To commodities, right now we have Brent crude up about 0.7%, $72 a barrel. WTI crude $68 a barrel, and that comes after OPEC cut its oil demand growth forecast for this year and next. That's for a fourth month in a row. Heading over to gold, spot gold down about 0.5% at $2,607 an ounce. Bayer, their share plunged to the lowest in 2 decades. It's now down about 11% in Germany. The company cut its profit outlook for the year. It also said earnings will probably fall in 2025. And shares of Ticketmaster owner Live Nation, well, they're up about 5%. It says people, well, they just spent more money on tickets, food, and also that brand merchandise at its shows over at last quarter. And then finally, we have Shopify. The Canadian e-commerce reported third quarter revenue that came just ahead of estimates. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Well, it was just a week ago, Damian, they were all heading to the polls.
That's right.
And boy, the world has changed. Risk assets have absolutely been on a tear. Again, my favorite proxy is Bitcoin, 86,000. We're just under 90,000 earlier in the trading session. So just a big move there in risk assets. Where do we go from here? Carol Schleif, she has some thoughts. She's the CIO of BMO Family Office. Carol, thanks so much for joining us here. The world has certainly changed a lot in the last week here. How have you and your colleagues at BMO kind of thought about these markets and where to go from here?
Well, it hasn't really changed the way we're investing portfolios. We were leaning into growth to begin with because the U.S. economy has been so strong. But the interesting thing has definitely been to see the sweep that you saw on the Republican side, and the speed and clarity with which the new incoming Trump administration is executing on a lot of, or at least teeing up to execute on a lot of the promises. But we've been leaning into industrials for a very long time. We've been talking about small caps for a very long time. So from that perspective, we do think it's wise to take, when you heard Chairman Powell asked a lot of these questions about how are they, if they are factoring in the incoming policies, and he said they were taking a very measured approach. They couldn't do anything yet. You have to, once the policies are firmer, then you can start modeling them. We think that's a wise decision too. Markets have definitely gotten a bit ahead of themselves, if you will, in the short run here, but that lean into growth and a well-diversified economy continues.
Well, Carol, you referenced the U.S. economy as being sort of Goldilocks on steroids. And, my only question is really this. I mean, you look back over the last 2 or 3 years, this U.S. exceptionalism narrative, it's kind of pulled the rest of the world along with it, right? It's been pretty good for the rest of the world. But this time around, I mean, if we still see U.S. exceptionalism, if we still see this economy continue to, grow at this pace, I mean, there's no guarantee that's going to be good for the rest of the world now, is it?
Yeah, that's true. But, it's important to remember that a Trump 2.0 is not necessarily just an acceleration of Trump 1.0. And even tariffs are being, when you look at the verbiage around tariffs, especially through the campaign, it's used a bit differently than it was the first time around. And if you look through to the ultimate goal of trying to bring manufacturing and jobs and a solid economy back to the U.S., a solid, sustainable economy, that piece is good. But we do suspect tariffs and some of these other things are opening negotiating positions, and that there'll be a lot of back and forth, a lot of deal making going on in terms of doing business here. So we do think there's that capacity to be able to do it, but the rest of the world is going to have to figure out, especially defense spending, a lot of other areas they're going to have to figure out how to step up and compete that way.
So, Carol, earnings season, we're pretty much through the meat of earnings season. What did you take away from earnings season, the guidance outlook? Is that enough to support this market?
Well, the earnings season was strong, and you've got easier comps going into the next few quarters. So even before the elections and the election outcome, you had solid look through to that. It'll depend, we'll watch a lot. You've got retailers yet to report because they're a month off the rest of everyone else with their fiscal quarters. So we'll watch retailers because you've had this really odd anachronism where, the exit polls were telling you consumers are really feeling the pain, and yet consumers are still spending, and consumer confidence has been ticking up. It's not where it was pre-pandemic, but it definitely has been ticking up, and the employment market remains strong. So we'll be watching those retailers to see how the holiday season goes. As we all know, we're panicking just a little bit because there's 5 fewer days between Thanksgiving and the holidays this year. So we're going to have to accelerate some of that. But there's a lot of strength underneath. The interesting thing is, to another anachronism out there, is that Wall Street hasn't liked the amount that the big tech companies are spending on artificial intelligence. But I think Main Street's really going to like that in the intermediate and long term, because that spending needs to happen to undergird our ability to be able to continue to grow productivity at the above average rates we've been at for the last 5 years.
Carol, I know you want to stay short U.S. Treasuries here, short duration effectively. I know you see upside, to the long end of the curve here. But, I'm just looking at, the range of outcomes priced in by forward markets in U.S. Treasuries and swaps. And, I mean, you just look at the middle of next year or the end of next year even. And, it just seems like there are a whole heck of a lot of people looking for rates to rise, and a whole heck of a lot of people thinking rates are going to fall, and fall pretty aggressively. Just curious where you stand with all that.
We think that the trajectory is upward on those treasuries for a lot of reasons, and we've been short for a very long period of time. Last October, when they ticked up a little bit, we did extend out a little bit, and then we pulled that off the table a month or so ago, just moving back towards the shorter end of the curve, really believing that you're going to see upward pressure, whether it's from actual growth and accelerating growth in the U.S. economy, or the globe starting to generate concern over the deficits. We'll have to see how those policies play out. The one advantage and the one thing that the markets are leaning on is that we've gotten more clarity early on, and we'll get more clarity once, the inauguration day hits and there's a lot of activity going out that way. I think one of the other reasons why the market took some comfort and you saw those 10-year rates in particular decline was coincident with the Fed meeting last week, when Chairman Powell was asked on 3 different occasions about whether or not he was going to leave. And so having that stability at the Fed, at least through the end of 2026 or his term in 26, reassured markets.
Sorry. So, Carol, talk to us a little bit about what the markets are currently pricing in here. I mean, do you think the markets have got it right? I mean, they were pretty accurate, especially in the week leading up to the election, the months even, in terms of calling for, a Trump victory, more or less a red sweep. But I'm just curious to hear your thoughts right now in terms of what the U.S. Treasury market's discounting, what the equity markets are discounting, and even what commodities are discounting at current levels. Just curious to hear your thoughts there.
Yeah, it's interesting. The markets are probably a wee bit ahead of themselves in the short run, so they need some consolidation or not necessarily pullback, although it's been a very long period of time since we've had a 5 or 10% pullback. And those levels of pullbacks are really normal, especially in up years. But we do think the intermediate and longer term bias on the equity markets is up, given everything going on here. On the fixed income markets, we do think you'll see the Fed continue to drop in a measured fashion. They've committed us all to being very data dependent, and they're really leaning into that data dependency at the short end. The intermediate end, we think, is probably going to err where yields will start drifting up. Our fair value range in the current markets is anywhere from 4.5 to 4 3/4 on that 10-year. Right. So you're a little below that now. But we do think you could see that push up depending on where the deficit comes in. We're running a close to $2 trillion deficit.
All right. Carol, thank you so much for joining us. Carol Schleif, CIO at BMO Family Office. We appreciate that. Coming up at 2 p.m. Wall Street time, Shali Bassick, Bloomberg Television, interviewing Citigroup's CEO Jane Fraser, talking about the future of Citi. That stock, Citi, that's up 35% year to date. How about that?
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks taking a little bit of a breather. Investors weighing the potential policy impact of President-elect Donald Trump's cabinet picks. We have shares of Trump Media and Technology taking a breather too. They're down about 5%. So we'll get to futures. NASDAQ futures, little change, down about 10 points. Dow futures up about 0.1%, 89 points. S&P futures, little changed, down about 5. We have the 2-year yield at 4.33%. That's up 7 basis points. Yield on the 10-year, 4.38%, and that's up 7 basis points. To currencies, we have the dollar stronger, Japanese yen weaker, we have euro, British pound weaker, we have Bitcoin down 2% at about 86,000. That's after nearing 90,000. Few companies making news. Chipotle, it announced that interim CEO Scott Boatwright will be its new leader effective immediately. That's after Brian Niccol left to become the chief of Starbucks. Southwest Airlines are going to be offering voluntary departure packages or extended leaves to airport workers in 18 cities. That's due to aircraft delivery delays that force a carrier to trim its flying plans. And finally, have you noticed a difference in your online grocery bill? Well, the latest data from Adobe, it shows online grocery prices, they declined in October, posting their first year-on-year drop since COVID. That is a Bloomberg Business Flash. Paul and Damian.
All right, very good. Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Podcast. Economic indicators today are brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Let's go to our good friend, Kriti Gupta.
Yes.
She is over there in London. I have no idea how that happened.
I mean, really.
She's a host of Bloomberg Television over there in London. Kriti, thanks so much for joining us here. Boy, we are, it was a week ago that Lisa and Damian and I, we went into the voting booths and cast our ballots. And boy, a lot has changed in the last week. What's the view from the city of London about the U.S. election and what it means for markets over the last week or so?
Well, Paul, Damian, all you have to do is call me right back, and I'll hop on a plane. I'll come right back. One of the big takeaways in London, and I think one is a surprise to not just folks here in Europe, but to me as well, is that the narrative of the way you trade this going into the election has completely flipped. And I think the best way to look at it from a European perspective is, one, what it's doing to the U.S. equity market, the dollar, Bitcoin, we'll get to that in a moment, but also what this means for the two wars that are raging in this region. I think it's really significant here that going into the election, it was immediately thought, you saw it in bonds and FX, et cetera, that Trump equals bad for Ukraine. It's that simple. On the other side of the election, you've seen the exact opposite, that Trump will bring an end to the war in Ukraine. At least that's the narrative you're seeing. So the way that the assets have priced it has completely flipped. And I think that's the big takeaway here, that what you knew maybe 2 weeks ago going into this election no longer applies.
Kriti, put your option hats on for me, please. The MOVE index has gotten absolutely smoked. So that means fixed income vol has just gotten crushed. Equity vol, the VIX, crushed. FX vol is finally rolling off here. So in terms of your approach to this market, if you're a speculator and you're looking to speculate via the options markets, is now the time to dig in?
It feels like it. I mean, that's the only trade that I've seen consensus across all investors. They're saying go long vol. It's the only one that works. But I think it's interesting. Another one has come up that I kind of, again, comes around kind of the shifting narrative idea. Damian, you'll love this. The idea of how you actually play Latin American currencies. I saw it this morning, actually, on the back of Marco Rubio being expected to be the new Secretary of State, simply given he's so pro-Latin America, very anti-China, very anti some of the other kind of partners that the U.S. trades with. And because of that friendshoring argument, that could potentially be a tailwind for a lot of these EM bets that, by the way, have been completely obliterated lately.
Absolutely.
Again, on the idea that trade is going to get hit.
Yeah, but let's differentiate here. Claudia Sheinbaum in Mexico, that's one trade. But my goodness, Lula is another one. And we know that Bolsonaro and Trump were very, very close during Bolsonaro's term, and obviously he is the anti-Lula. So I think it is a tale of two countries there. But you're absolutely right. Latin American currencies have gotten absolutely crushed. And if FX vol is really indeed coming up in this market, I have to agree with you. I think there's a trade there.
I feel like I just got the Damian Sassower.
I'm sorry. I was asking you a question. That was a question, right? Didn't I? It sounded like it. No, I'm sorry. It probably wasn't. All right. Talk to us a little bit about Bitcoin. Come on. I mean, I don't believe in crypto, but you do. Tell us. I mean, is this just sort of like a sentiment read, or is there something more here?
It feels like it's a couple of different factors. Look, yes, there is this association that crypto is ultimately a Trump trade, but I think I'm going to put it in the words of one of our guests that we had on the show this morning. There is a lot of liquidity sloshing around. So the idea here that money is going into crypto, it's going into the dollar, it's going into the U.S. equity market, it's not that far off. I think the bigger question is, where is it coming out of? And if you ask the folks, especially in London, the answer is coming out of European equities, it's coming out of European currencies, it's coming out of China as well, because people don't want exposure there. So you're seeing a major hit in terms of the Asian assets as well. And if the US assets, say the equity market, the dollar, the bond market, look far too expensive, where else do you go? You go to crypto. Of course, there's also that fundamental narrative here that Trump is a positive for crypto assets, really courting that community, plus having the backing of Elon Musk as well, who's also very popular in that community. For me, I think the big question here is, if you do see this crypto rally and you see a dollar rally, well, there's also an inverse kind of fundamental narrative there. Crypto is meant to be decentralized currency. How do you be pro-crypto and pro-dollar? That's a question I would ask Trump if he was here.
So we have seen, as you mentioned, Kriti, the strength in the dollar here. So again, the euro weaker, the pound sterling weaker. What's the feeling in London about kind of where some of the European currencies may be going here in a second Trump administration?
So the UK remains an island of stability, which is interesting because we haven't really seen a whole lot of that in the last couple of years. But in the context of some of the kind of ripple effects of a Trump 2.0, you are seeing a German election being called as of today. It's going to be on February 23rd. You are seeing a lot of kind of rethinking the strategy, but on the back of it, really highlighting that European weakness in that sea of red. And you're seeing that in the asset prices this morning, especially in Europe. You are seeing the UK a little more insulated from that. And the idea here is simply that there is a new leadership in the UK. They've already kind of are dealing with their budget and their kind of fiscal handcuffs there. So in a broad kind of sweep of weakness in Scandinavia, weakness in Eastern Europe, weakness in continental Europe, maybe the UK won't get hit as badly as previously expected.
So, Credi, just how much of a sentiment shift was there after that UK budget was announced at £30 billion? I mean, I know 15 was expected. There's extra borrowing over the 5 years. I know people have revised their GDP estimates up off the back of that. I mean, if we're looking to kind of, play different countries within the Eurozone or, ex-Eurozone if you include the UK, I mean, are we looking to maybe get short? I mean, Olaf's out, right? Are we shorting DAX versus getting long the FTSE? I mean, what are you seeing here cross country?
Well, it's interesting. One of the big, and I'm going to say it's not the sexiest of topics, but it's certainly one that's dominating the Europe conversation, is taxes. And this is where the kind of budget in the UK marries perhaps the conversation happening in Germany. In Germany, there is a 28% corporate tax rate, 29% corporate tax rate, almost 30, is one of the highest tax spots in Europe. The UK is increasing taxes to help their budget shortfall, perhaps not by the amount expected. So it's still kind of thought of as an expansionary stimulative policy. Even in France, where most of their GDP, I think something like 40-50%, is actually covered by taxes. This is really important in the context of the US election because, of course, what has President-elect Trump been talking about on the campaign trail? Decreasing taxes. So for a lot of investors, for a lot of corporations, it is simply a matter of who has the lowest tax rate for consumers, for corporates, and then, of course, for other international investors as well. And that seems to be kind of the game that people are playing right now.
Credi, what has happened to you? Taxes, really? I mean, yawn. That is so boring. Used to be so much more exciting when you were based out of New York here. But now let's talk a little bit about the debasement trade in commodities and gold and metals. Anything there that catches your eye?
It is a China read-through, 100%. I mean, oil especially, when you have this kind of geopolitical volatility in the Middle East, you have this cushioning out of the United States in terms of just extreme supply, you are starting to see a lot of the miners, a lot of the gold, even a lot of the oil play coming out of what's happening in China. And that's where the stimulus story is so important in China. I think today had their biggest, their weakest fix yet in over a year when it comes to the offshore yuan. They're talking about trying to increase more stimulus into these markets, having kind of a buyer of last resort to some extent in the stock market, in the property market, but Jamie and Paul, to no avail. And that's really where the issue is. That's why continued pain is showing up in these markets, plus this kind of fear factor of what, again, a Trump 2.0 is going to mean for China and for broader Asia as well. All of that is showing up in the commodities trade. So even on a very positive day, for example, yesterday's trade in Europe with green on the screen across all sectors, commodities took a hit because of the China story.
Credi, thank you so much for joining us. Credi Gupta, she's a host of Bloomberg Television based over in London. Bloomberg Surveillance this morning is brought to you by BNY. BNY's expertise and insights can help clients achieve their ambitions. Visit BNY.com with our news in New York City.
All right, Paul and Damian, President-elect Trump continues moving quickly to fill key positions for his second term. Bloomberg learning Trump will appoint Marco Rubio as Secretary of State and Florida Representative Mike Waltz as National Security Advisor. Both men have track records of harshly criticizing China. Let's get more from Bloomberg senior editor Bill Ferries.
Mike Waltz, he's a congressman from Florida, former Green Beret and veteran of the Afghan War. Definitely a hawk on things like China and U.S. military policy in places like the Middle East. Then you have Marco Rubio, is well known on foreign policy circles for his focus on Latin America, places like Venezuela and Cuba, partly because he's from Miami, but he is very much a hawk on China as well.
Bloomberg's Bill Ferry says Trump's picks give some indication of the direction his next term is going to take after the Republican campaign on threats to impose a 60% blanket tariff on Chinese products. Stocks in China dropped 1%. The president-elect also tapping a loyalist to fill out his team focused on securing the border and carrying out a mass deportation. CNN reports Trump will name South Dakota Governor Kristi Noem to lead the Department of Homeland Security. Noem will join the border czar Tom Homan and immigration hardliner Stephen Miller when Trump takes office in January. Unlike those positions, Noem would need Senate confirmation to take over Homeland Security. And President-elect Trump has picked several loyalists from Capitol Hill to fill out his cabinet. That threatens to cut into Republicans' majority in the House, but the GOP still on track to gain control of Congress once all the votes are counted. As of now, the Associated Press has called 214 races for Republicans, 205 for Democrats. It does take 218 to win. Meantime, the last race left to be called in the Senate is complete. The Democrat, Ruben Gallego, defeated Republican Carrie Lake for an open seat in Arizona. That puts the final count in the Senate, 53 Republicans and 47 Democrats. And yes, it does have butter. Costco, well, milk anyway. Costco forced to recall 80,000 pounds of butter because the label failed to mention that the kitchen staple contains milk. Packages for both the salted and unsalted Kirkland Signature Sweet Cream Butter list cream as the ingredient. That doesn't include an allergy warning that it contains milk. I guess they just assumed everybody
I just
knew
assume
it.
it's butter.
It's butter.
You know, you churn it.
Can't believe it's not butter.
Thanks, Damon. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Lisa, Paul, Damien.
All right. John Tucker, thank you so much. Damien, what happened to your New York Jets this year?
Oh, you really want to pick on me now? I'm sorry.
This is brutal, dude.
It is brutal. I mean,
Jets, take your pick.
I know we could go anywhere.
We've mailed it in. It's a complete. We got to blow it up. I mean, you got to blow up the whole team now. You got to rebuild. I mean, this is years and years in the making. You got to find a quarterback. That's kind of where we are.
One of the greatest quarterbacks of all time.
Yeah, he doesn't look like it anymore, right? I mean, he's not mobile in the pocket. I guess maybe we're not blocking for him. I mean, I don't know. I mean, look, I'm looking at the same screen everybody else is. If anybody wants to write me, if you have any ideas on what the Jets should do next, I'm all ears. But I mean, at this point, I mean, it's basically the house is on fire.
All right, so we're going to move on to the Knicks, is what we're doing.
Yeah, well, I mean, but they're not looking so great
It's okay.
either. But
It's
I mean,
okay.
but again, I mean, it's early in the season.
All right, folks. I mean, in New York, we got nothing as it relates to football here.
Well, NYCFC, that's technically football.
Okay, NYCFC, we'll go there.
Quarterfinals.
That's how desperate we are. S&P futures -5. The Dow up 30 points. Nasdaq up. Nasdaq's down 3 points. This market has no idea what's going on out there. The VIX, I'll call it out for Tom. It's at 15, just above 15 for your VIX. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, stocks kind of pausing their gains. Signs of rally has left valuations overextended. Right now we have futures, well, little change. NASDAQ futures up about 2 points. Dow futures up about 31. S&P futures down 3 points. We head over to the 2-year yield, 4.33%. That's up 7 basis points. The yield on the 10-year, 4.39%, and that's up 8 basis points. U.S. small optimism and that rose in October and the weeks before the election. Now, the index matched the highest reading since early 2022. Tomorrow, we get October's reading on the Consumer Price Index. Thursday on to PPI, followed by retail sales on Friday. We have shares of Hertz. They're down 7%. Losses a bit wider than expected again. It also booked a $1 billion charge for the decline in the value of its fleet. Tyson Foods, they forecast higher earnings in 2025, a turnaround in the chicken business, rising demand for prepared foods. Well, that offset those losses in the beef market as shares up more than 5%. And forget those cameras, security guards, retailers. They're considering something new to prevent theft. They're weaving radio-emitting threads into the clothing, turning the items themselves into anti-theft devices. Who knew? That is a Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio and are streaming live on YouTube as well. Small cap stocks have been participating in this risk-on environment over the last 5 or 6 trading days. I'm looking at the Russell 2000 indexes have a nice little rip there.
Yeah.
So it's good to notice. Let's see how much more we have in the small caps and kind of where we go from here, just in terms of thinking about bonds, stocks, other risk assets. Marta Norton, she joins us. She's a chief investment strategist for Empower. I think we have Empower here, don't we, at Bloomberg? Yeah,
I think so.
Marta, thanks so much for joining us here. Give us your thoughts. You woke up Wednesday morning. You saw the political election results. How did that kind of change how you guys look at this market, if at all?
Well, I think it is something that we have to factor in. I mean, I think when you take a look at the direction of policy and the massive shift we have in most areas on the tax front, at least from a proposal standpoint, a tariff, a kind of a magnitude question, immigration, of course, there's a lot of shifting elements do affect the fundamentals. I don't think they necessarily change all the elements that are on the ground. And I think in the wake of the election, we're focused a lot on what those results are, and we're kind of losing sight of, the overarching valuations and the conditions of the market. But I think ultimately you do have to integrate the political view into this broader picture that we're looking at.
So, Marta, talk to us. What else is in the Trump trade here? I mean, small caps are up 20% year to date, but there are others, are there not? I mean, talk to us a little bit about what the Fed's going to do in this market. Is December in play, or is there a chance that we pause?
Okay, so first, kind of running down the Trump trades. Of course, we have equities broadly, and that's predicated on this idea of economic growth, potentially lower taxes, both on the individual front and for corporations. Small caps, financials, energy, all of those different areas participating for different reasons. Certainly tax policy, also regulation. We have the Bitcoin bonanza, really, and I think that's one of the purest Trump plays that we have, with a lot of focus on kind of a friendlier regulatory environment there. And then, of course, on the fixed income side, it's the yield curve that folks are really thinking about, especially as it pertains to deficits, as it pertains to inflation. So a lot of different moving pieces, but a general sense, particularly in the equity market, of euphoria. As we're taking a look forward, of course, I think one of the points I would just call out is that I think we're really pulling in some of the returns, experiencing them now with the market kind of forecasting these policies forward. So there's, a bit of a run up. I wouldn't expect it to necessarily continue in perpetuity. I think the question of the Fed is an interesting one for December. Powell was very clear in his press conference that the Fed is looking at the conditions on the ground and is not, kind of playing the forecasting game as it comes to policies. But the conditions on the ground would suggest that the consumer, the labor market, are potentially healthier than that they thought in September. And so I think the market is suggesting we're still leaning toward a cut. I think that makes sense, but certainly you can make the case for a pause in December.
So, Marty, you mentioned the deficits, and I'll throw it out there. Do we care? Should we care? I mean, servicing our nation's debt we're spending more there than we are on defense. I saw that statistic recently. That got my attention. The markets care.
That got my attention too. I think it does get the market's attention in terms of kind of what that means for the firepower of government spending. The question of whether markets care, I mean, there's a lot of talk these days about bond vigilantes and their effect on the yield curve. It's something of a point on the horizon. We just don't know the speed at which we're approaching it at. At some point, you have to imagine that deficits matter, either from an economic growth perspective and crowding out private investment, or from the perspective of folks pushing up the yield curve and some of the concerns around the longer term picture there. So I imagine it matters. Does it matter to 2025? I'm not sure that's the case. And that's simply because some of these proposals aren't in play, and there's still some uncertainty as to how they play out. But it is something that I think the markets are going to have to grapple with over time.
Well, Marta, let's just go there. Is a Trump presidency inflationary or not? I mean, the markets believe it is.
It seems as though there are elements of the Trump policies that appear inflationary. And so that relates, of course, to in particular, the tariff regime and the idea that as you layer on tariffs for imported goods, you're giving a reason for domestic producers to also raise their prices. And so that big question of what that tariff effect is on inflation, I think that's an open question for the markets. I think one question I would have is just how inflationary is it? And I think with the recency bias alive and well in all of us, I think we look at kind of where the PCE was ending, a few periods ago where it peaked, at 7% or so. And we're thinking, is that what inflation could look like under this regime? I doubt it, but it certainly means that last mile of inflation is the hardest to traverse. And that's something that we've seen for quite some time, particularly because of shelter. And now we're adding a few other elements there that could keep inflation above the 2% target. We'll have to see how that plays out. Certainly Powell is tight-lipped on that front, but that is something that you have to grapple with.
So Marta, in the fixed income space, I'm happy to sit here in my little spot here and get 4.3% coupons, just clip that all day long. Is that a fair strategy, or should I take some credit risk?
Actually, as we are taking a look at 2025 and characterizing our outlook for fixed income, we are talking about this as a coupon clipping year. And that's because, certainly yields are a lot higher, and that's very appealing. But the question is, are they able to fall? Can you get some capital appreciation? And I think that's a larger question. And frankly, it was a larger question even pre-election, where you were thinking about kind of a soft landing and deficits even pre-Trump. Being something that investors had to think about. I do think this is a coupon clipping year. I do think there's room for credit exposure. Certainly spreads are very tight, so you're not getting extra compensation for taking on that credit risk, but they're tight for a reason. They're tight because there's reasonable health on the credit side of the spectrum. So I think you can pick your spots and have some credit exposure, maybe add a little bit to your yield profile without taking massive amounts of risk. But I don't think this is a big year for capital appreciation as we look forward.
Marta, over the last two trading sessions, volatility has gotten absolutely crushed across all asset classes, equities, fixed income, and FX. I'm just curious to hear your thoughts on that. I mean, geopolitical risk has not been something that is factored into people's calculus, even if going back to Ukraine, Russia, right? So, does it matter this time? I mean, Trump is definitely going to be stoking a little bit of the flame here. We see some of his appointments. Just really quickly, 30 seconds or less, what are your thoughts on inflation here? Sure. I'm sorry, volatility.
So real quick on that front, I think a lot of the quieter volatility that we're seeing is the result that three things came into play: the soft landing, the Trump trade, and clarity on election results. I think that just kind of took concerns out of the market. Does that mean that we won't have concerns going forward? I don't think so. I think the largest question mark on the geopolitical front really relates to the U.S.-China relationship. That's something that we're going to have to watch very closely with tariffs, especially one of the key talking points there.
Marta, thank you so much for joining us. Always appreciate getting some of your time. Marta Norton, Chief Investment Strategist at Empower, getting her thoughts on these markets. Again, the markets have been really on a risk-on posture since the election, pretty much across the board. And again, one of the greatest examples of that is just Bitcoin. Earlier this trading session, we approached $90,000 per token. We're now down to about $86,000 per token. But a lot of volatility there, but a lot of risk on feeling in the market. Right now, futures -2, Dow up 63, NASDAQ up 3. Kelly Clarkson coming at you.
Next to you.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, a packed schedule. Omar Aguilar, he's the CEO and CIO at Schwab Asset Management. We'll get his thoughts on these markets here. We've gone too far, too fast over the last week or so. Does this market need to pull back at all? Take a break. Heidi Crebo-Rediker, adjunct senior fellow at the Council on Foreign Relations on unilateral foreign policy in a second Trump term. Sri-Kumar, president at Sri-Kumar Global Strategies, get his thoughts about these markets here. Then Wendy Benjaminson, she's the senior Washington editor with Bloomberg News. She's down in D.C. We'll get her thoughts on some of these appointees by President-elect Trump. So we got a busy hour coming up. Let's kick it all off with Lisa Mateo and a Bloomberg Business Flash.
You got it. We got a little movement in futures. This is after a few milestones. First, the S&P 500 closing above 6,000. Then the Dow Jones Industrial Average finishing above 44,000. So right now we have NASDAQ futures up about 1 point. Dow futures up 62 points. S&P futures down about a point. The bond market, yes, back in business after the holiday. The 2-year yield 4.33%, up 7 basis points. The yield on the 10-year 4.39%, and that's up about 8 basis points. Bitcoin kind of retreating after surging near 90,000. It's now down nearly 2% at around 86,000. Crypto-linked stocks erasing earlier gains. For example, MicroStrategy down more than 2%. Coinbase down more than 4%. We have Robinhood Markets down more than 4%. Shares of Home Depot, well, they're up more than 1%. Its best sales in nearly 2 years. It said bad weather helped boost its DIY sales. And shares of Shopify, they're soaring up 22%. Third quarter results beat expectations. It gave a strong outlook on top of that. After the close, we move on to Occidental Petroleum and Spotify. And finally, shares of Tesla, well, they're falling. They're down about 2% this morning. This is after climbing 9% yesterday. Comes after the stock advanced over 39%, adding more than $300 billion in market cap since the election. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. Tom will be in tomorrow, so I'm told. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Bloomberg Surveillance is brought to you by the Jewish Communal Fund. JCF helps you respond to crises swiftly. Open your JCF Donor Advised Fund now to secure a tax deduction. Visit jcfny.org or call 212-752-8277. Big changes, obviously, the last week, Damian. We've been all dealing with a new election result coming from last Tuesday, and the markets have been really reacting across the board here. I want to hear what some of the folks at Schwab are thinking, because when you think of Schwab, you think of just everybody they talk to. They talk to everybody. Omar Aguilar, he's the CEO and he's the CIO at Schwab Asset Management. Omar, what's changed for you and your outlook for these markets, how you talk to Schwab clients, given what's happened over the last week?
Yes, good morning. It certainly has been a very intense week. We have seen markets clearly, enjoying the fact that it was a very clear victory. I think removing the uncertainty coming into the election, created just a very positive momentum into risky assets that we have seen it. And I think that has accelerated with the fact that the expectations going forward will be for, tax reductions, will be from deregulation that has a potential for positive impacts into GDP. So when you actually think about all the different events that are going into what has happened over the last 5 days, the market seems to be very, very optimistic about what may come in terms of growth, in terms of what that means for earnings, and in terms of what that means for potential just, overall economic growth that comes from the U.S., which, puts everything in perspective in the sense that, what we were thinking about that rotation towards the early phase of recovery in the economy seems to be accelerating, at least for what we have seen in the short, 5 days after the election.
Omar, I know that Paul wants to hear what the guys at Schwab Asset Management are thinking, but I want you to put on your 2000, 2001 Aaron Krantz, Lehman Brothers Alternative Investment Management hat. I want you to talk to me about the death of active management. I mean, liquidity premiums, complexity premiums. Which strategies should investors be looking at under a Trump administration?
Oh my God, it just took me back like, 20 plus years.
I was there with you, Omar. You don't remember me. I was very young back then, but I remember you.
Back in Park Avenue, which was such a wonderful time. I think the evolution of what we consider now alternative investments. Back then it was fully dominated by hedge funds, and that's a big part of the business that we had back at Lehman Brothers Alternative Investment Management. But the part is that the market has now going into this combination of public markets and private markets. I think the ability, the accessibility of what you can actually get into the public markets and private markets is like the best we have ever seen. Back in those days, access to a hedge fund or access to private equity, access to private credit was only, for those, highly wealthy individuals that could actually get access to some of those managers, and the capacity was very low. The market in alternatives was so small that actually prevented many people to get access to it. Nowadays, we basically have plenty. The market has, it has grown at least 10, if not 15 times to what it was back then. And the access to the different parts of the alternative markets is now grown significantly. You can actually get access through different, setups, including some of retail markets and some access to some, individuals that have in this mass affluent, segment. A lot of what we have discussed here at Schwab with our clients is the ability for clients to diversify their portfolio as long as this within their risk profile. The biggest thing that we always encourage is that in investing in anything but public markets will come in with a liquidity premium that you have to take into consideration. Now, going back to what I was saying earlier about the current situation and the economic growth, liquidity has not been an issue. Liquidity has been actually a positive, and therefore access to alternatives at this point is lower risk that probably when interest rates become an issue.
Omar, so how have earnings kind of supported this market call here? We kind of got through the meat of the earnings season here. Was it enough to support this market going forward? I mean, take a look at the earnings and the guidance from a lot of these companies.
Yeah, we had a pretty robust, earnings season. We have seen, what I think most people expected in terms of, good outlooks, in terms of potential for future. What is interesting, though, is that, a lot of the earnings beat, came, pretty strong, but the sales beat were not as strong, which actually mean that there are a lot of the consumers, while they were still positive and they were still, purchasing and are still going with that consumer sentiment that is driving positive results, still, the moderation that has come from not necessarily going and buy, 5 times the tickets that you used to buy, or, getting a, maybe a 4-star hotel as opposed to a 5-star hotel, that seems to be playing along a little bit. And that being said, earnings overall, have been, very, very solid. A lot of that is also because the capital expenditure cycle has actually accelerated. And when you actually see the results of earnings, those companies that had a healthy capital expenditure rise, did much better than those that they didn't. Profitability played a big role and quality played a big role. So companies that had, healthy profitability also continue to do well. So a lot of what we observe here is that, yes, the risk to the market continue to be at the macro level valuations and at the micro level. And at the macro level, it is going to be, paying attention back to what, was, 3 months ago, which was inflation.
Omar, I have to talk my book a little bit here. I'm the head of emerging market fixed income research for Bloomberg Intelligence, and so I am focused on currencies. And as we know, the one factor that has been the key driver of currency performance, not only over the last year or 2 years, more like 3 years, has been carry. And a lot of analysts and strategists out there have been calling for the death of carry, a shift to more of a value-driven factor or maybe growth or something of that sort. I'm curious to hear your thoughts. Does carry play a role in investor portfolios in the current environment?
Yes, great question. And I think, the biggest change was obviously the Japanese carry trade. And that, I have enjoyed that for, probably 80% of my career here. I think not only me, but a majority of people. And I actually got to say that, I don't think it is dead. I do think that the size of the carry trade and the role of the carry trade that plays in the strategies is not as high as it was even just 2 years ago. I think because of, the dynamics that we have seen in the currency market, because of the dynamics we have seen on the global trade, we have seen that the impact of that and the possible, alpha resulted from the carry trade has actually been, reduced. I don't think it's over completely, and I don't think, as you probably know, in this setup, you can always find, ways to just get access to that carry trade, as long as you actually have access to the liquidity that you get into those markets. There is always going to be that, differential that will allow us to just continue to do the carry trade. And actually, with technology today, it's actually easier to find than it was, probably 5 or 6 years ago.
Omar, thank you so much for joining us. Always appreciate getting some of your thoughts. Omar Aguilar, he's the CEO and he's the CIO at Schwab Asset Management, getting us his thoughts on these markets. A little bit of a mixed bag here in the futures. We'll get to that in just a moment with our news in New York City. Here's John Tucker.
And Paul, the President-elect Donald Trump expected to name Marco Rubio as Secretary of State. Rubio has taken an aggressive stance on China's emergence as an economic power. Let's get more from Bloomberg's Jill Desis.
Rubio has been a pretty enormous China hawk over the last several years. He was actually sanctioned by Beijing over a couple of different matters, whether that be about the Hong Kong protests back in 2019. He also was very outspoken about the Xinjiang region in China and a lot of the U.S. allegations facing Beijing there. So, I mean, this is somebody that definitely China, I think, has bristled against quite a bit.
Bloomberg's Jill Desis. Along with Senator Rubio, President-elect Trump has named another China hawk, Florida Congressman Mike Waltz, to be his national security advisor. And he's tapped another loyalist, South Dakota Governor Kristi Noem, to be his Secretary of Homeland Security. President-elect Trump has picked several loyalists from Capitol Hill to fill out the cabinet, and that threatens to cut into Republicans' majority in the House. But the GOP still on track to hold on to Congress once all the votes are counted. As of now, the AP has called 214 House races for Republicans, 205 for Democrats. It takes 218 to win. And Bloomberg's Derek Walbank is watching those races closely for us.
On the House side, you are looking at a paper-thin majority, no matter how much it shapes up. It looks at this point like Republicans are going to hold the House. My guess right now, if I were counting it up, would be somewhere around 222 seats. The majority is at 218. So that's not too much of a distance.
In the upper chamber of Congress, the last race left to be called is complete. The Democrat there, Ruben Gallego, defeated Republican Carrie Lake for an open seat in Arizona, and that puts the final count in the Senate, 53 Republicans and 47 Democrats. A tragedy in China, 35 people killed after a Chinese driver rammed his car into a crowd in southern China. It marks the nation's deadliest attack in at least a decade, following a spate of violence amid the economic slowdown there. Police attributed the rampage to the 62-year-old attacker's unhappiness over his divorce settlement. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Paul, Lisa, Damian.
All right, John Tucker, thank you so much. We appreciate it. Netflix says 70 million users now watch shows with advertising. Are you one of them, Damian?
Yeah. No, I am one of those guys who I have a real trick actually in terms of how I can click through the commercials really quickly. You know, when it comes down, there's like a 5-second window. But if you click up there, you can kind of eliminate the 5-second window and then the 30-second commercial. I've got it down to a science. I don't need to pay anything.
You don't want to see the commercials?
I don't.
What are you paying for? If you're paying for Netflix, you have to watch commercials now?
You have two different plans. I mean, the plan where you get no commercials, which is what I do.
If you want to pay more.
Yeah, so I mean, it's a whole thing out there. It's a whole new world out there. Tom Keene's still out there with the rabbit ears, but you know, Damian's out there skipping through commercials. That's how we roll. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've got little movement in futures. This is after the main stock averages closed at new highs. Right now, NASDAQ futures down about 14 points. Dow futures up 43. S&P futures down about 4. We have the 2-year yield at 4.33%. That's up 7 basis points. The yield on the 10-year, 4.39%. That's up 8 basis points. To commodities, we have Brent crude up nearly 1%, $72 a barrel. WTI crude, $68 a barrel. We have spot gold lower, $2,612 an ounce. Bayer shares plunged to the lowest in 2 decades, now down 11% in Germany. This is after it cut its profit outlook for the year. It also said earnings will probably fall in 2025. And shares of Ticketmaster owner, concert promoter Live Nation up 6%. Better than expected quarterly earnings after a big summer concert season. And it also says it expects more growth in 2025. And a company making news, that's activist investor Elliott Investment Management. Sources say it built a $5 billion plus position in industrial giant Honeywell. Now, Elliott reportedly pushing Honeywell to consider breaking up the company. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Damian.
All right, Lisa, thank you so much. We appreciate that. We have Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we are streaming live on YouTube. So head over to youtube.com, search Bloomberg Podcast. Well, the financial markets have certainly been responding to the election of former President Donald Trump to be president-elect. We have a Republican Senate and potentially a Republican House as well. One of the questions a lot of folks have is, how about foreign relations? How is that going to play out under a second Trump administration? Heidi Crebo-Rediker joins us. She's the adjunct senior fellow on the Council for Foreign Relations. She joins us. Heidi, when you woke up Wednesday morning, I've been asking this question for a lot of market investors. How did maybe the election change their investment outlook? Maybe I'll ask it to you in this context. How did it change perhaps the way you feel the U.S. will conduct foreign policy over the next 4 years?
So I think we're in for some pretty significant changes in many areas of the world. We have a very complicated backdrop of conflicts both in the Middle East, obviously in Europe with Russia, Ukraine, and then this ongoing competition with China and potential for real disruption in the South China Sea, and the question of Taiwan comes up, obviously. So I think, there are, we just heard that Marco Rubio is the likely nominee for Secretary of State. He is not an isolationist, and he is one of the leading China hawks. So I think directionally, that's going to be very important. He certainly knows the State Department, and he has very strong views, very pro-Israel. So I think we're starting to see what that direction of a Trump administration foreign policy is going to look like.
Well, Heidi, you took the words right out of my mouth there. I mean, that's exactly what I want to ask you. We know everybody's a China hawk here, but my question is, where does Marco Rubio, Mike Waltz, and Elise Stefanik stand on other places like Israel, for example, and Ukraine?
So I think you have very strong supporters of Israel. I think that's without question, with Elise Stefanik, with Marco Rubio, and with Waltz. But you also have concerns, very, very significant concerns about where the direction of the Ukraine-Russia conflict is going, and how this administration, incoming Trump administration, is going to deal with first and foremost, incoming President Trump has said he was going to end the conflict before he actually gets into office. I'm not sure how that happens. It's a very complicated world out there. You now have China, Iran, Russia, and North Korea all working together in various ways to keep and to triumph in a number of those conflict areas that we just talked about. So it's far more complicated than it was when Trump was in office before.
Heidi, you mentioned the hermit state, and so we need to go there. I mean, North Korea has fallen under the radar amidst what's going on, more broadly speaking, in the Middle East, in Eastern Europe, and now we have North Korean troops on the ground in Ukraine. I mean, talk to us a little bit about what that means. Is that a form of escalation? Does the U.S. President-elect Trump need to respond to that?
So it is very concerning. I don't think that it's flown under the radar at all with the national security community, and there's limited visibility into what deals were done between Russia and North Korea to actually get them to send their troops into this conflict. And as you know, there are tens of thousands of both Russian and with the addition of North Korean troops actually on the front with combat ready, and Ukraine is one area where I think you probably will see a significant change with Trump and his new national security team, because they will focus mostly on Asia and on China. And we've all heard about the calls that Trump himself and his close team has had with President Putin. So I think there are a lot of big question marks out there, but the world is far more complicated. North Korea is a big risk that I think particularly given its proximity to Asian allies, that we really need to start watching very closely.
Heidi, the Middle East, another very difficult and fluid situation there. You mentioned that President Trump and Marco Rubio, pro-Israel. How do you envision that playing out, U.S. policy there? Because it doesn't seem like Israel's been listening to the U.S. over the past 2 years.
So, it's Netanyahu is obviously complicated and has huge momentum behind him in actually bringing about a complete conquering of Iran's proxies in the region, including Hamas, Hezbollah, and I think and the Houthis in Yemen. And so this becomes, you have strong alignment with the incoming team to the Trump administration vis-a-vis Iran, and limiting, curtailing, and completely, cutting the legs out of Iran's ability to actually to be an strong active catalyst and a negative catalyst in the region.
Heidi, 30 seconds or less, really quick. What's your thoughts on what's going on in Germany here? The end of Olaf Scholz, Friedrich Merz. I mean, what role do you think the U.S. and President Trump is going to play in that election?
So, I mean, obviously what's happening in Germany is it's simultaneous with a massive change in power in the U.S. And I do think that how Europe views its ability to ramp up its defense and security when you have Trump coming in and really not a fan of Europe, B, not a fan of Germany, and not necessarily willing to continue to fund the operations in Ukraine. So Europe needs money, Germany needs money. Their business model is broken, amongst other things. But I do think this early election, the fact that you are likely to see Merz and some kind of a coalition with the Greens come about is very much worth paying attention to.
Heidi, thank you so much for your time. We always appreciate getting some of your thoughts. Heidi Crebo-Rediker, she's an adjunct senior fellow at the Council on Foreign Relations, getting her thoughts about some of the hot spots around the world and some of the cooler spots, but they could become hot at some point. And we've got the new Trump administration coming into office in several months. What does it mean for global foreign relations? And so, again, the financial markets are reacting to a second Trump presidency. Foreign governments, I suspect, are thinking about that long and hard as well. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with a new guide to ETFs. Visit jpmorgan.com/ETFs insights to learn more. All right, how are these markets going to kick things off as investors await more news on President-elect Donald Trump's cabinet appointees? Let's find out. It's also another week of inflation data. We'll start with the S&P 500. Little change, up about 2 points at 6,003. The Dow up about 0.2%, 88 points at 44,377. And we have the NASDAQ kicking in little change right now, down about 13 points at 19,287. We go to the two-year yield, 4.33%. That's up 7 basis points. The yield on the 10-year, 4.39%, and that's up about 8 basis points. To commodities, we have Brent crude, $72 a barrel, WTI crude, $69 a barrel. Then we have spot gold at $2,612 an ounce. Checking with currencies, we have the dollar stronger, Japanese yen, euro, British pound weaker. Bitcoin down nearly 2.5% at about 85,000. That's after reaching nearly 90,000. At the open, we're also checking with Shopify. Their shares up 20%. That is your Bloomberg opening bell report. Paul and Damian.
Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. Sri-Kumar joins us. He's president of Sri-Kumar Global Strategies. And Damian, you'll appreciate this.
Santa Monica.
He's been all over the place. But how about this? Drexel Burnham Lumber.
Yeah,
that is just
good old days.
We're talking serious Wall Street credit.
Kidder Peabody.
The kids don't know who those names are, but we do. Shri, thanks so much for joining us here. The world's changed in the last 7 days here. Shri, give us your 30,000-foot view on the fact that we're going to have a new Republican president. We're going to have a Republican Senate and potentially even a Republican House of Representatives as well. How has that changed your view of these markets?
Paul, good to be with you and Damian. Can you hear me okay?
Perfect.
Yeah, wonderful. I think the change happened. We didn't know who was going to win last Tuesday, but now we have clear-cut victory, a complete sweep by the Republicans, and it looks like the House also will go their way. It is both good and bad. The good part about it is it gives you a clearer indication as to which economic policies the president-elect would like to follow in his administration. The uncertainty is how the markets will react. While the equities have gone up sharply, there is more of a doubt on the bond side, and you can see the yields going up, and the mortgage rate is likely to increase as well because of the expectation that the fiscal deficit is not going to be controlled with the measures that Donald Trump promised before the elections. That, I think, is the big risk. That, I think, is the big change, Paul, in terms of what has happened. And look at the dollar. The dollar has strengthened so much. And that is just the opposite of what Trump wanted. He has always said in his first administration, he likes a cheap dollar. He wants low interest rates. And both of them, I think, are at risk now with a stronger dollar and potentially higher interest rates in the United States.
So, Sri, let's game this out here. Beijing, are they going to depreciate the yuan relative to the dollar if these tariffs go through? I mean, that would be the playbook, right?
That would be the playbook, but they can try and do that, Damian, in terms of what that would achieve for them in terms of the trade side. But if indeed the Trump is going to go ahead with a 60% import tariff on Chinese products, any extent of depreciation of the renminbi yuan is not going to offset it. The big problem is that the tariffs are going to be more important than the exchange rate as far as China is concerned. From a Trump point of view, he has to look and see what the tariff increase would do to the United States. I am a firm believer that tariffs are bad. They will push up inflation rate. And as a student of history, I looked at the Smoot-Hawley tariff of June 1930. It was done by President Herbert Hoover with a very good intention. We wanted to protect American farmers. We wanted to protect American trade. Instead, it gave rise to retaliation by trade partners, and that in turn made the depression deeper and more widespread than before. So that's the risk I think Trump runs, and he needs to be very careful with the tariff moves.
Well, Sri, you mentioned 1930, and I'll, pull out my regime model and, quote Edgar Denny here and talk about the Roaring '20s. A lot of people are making comparisons to this environment and that which existed in the precursor to the Great Depression. Talk to us a little bit about that. Do you see any similarities there?
There is a similarity in the sense that before the 1929 crash came, we had the big run-up during the 1920s. And that was because of policies which were expansionary. The Federal Reserve had been set up in 1913. There was also an expectation that things were going very well. And you had a free capitalist run taking place in the 1920s. But just as you say that it's the darkest before dawn, it's also the brightest before night. And that's what you have to be concerned about, that as you had the roaring 20s, the 1930s were nothing compared with a decade earlier. And you want to prevent a repeat of that. And that's why it behooves us to study the 1920s history and to prevent that from being repeated in the 2020s.
Sri, what's kind of your leading, investment thought these days when you talk to your clients? Because a lot has changed in the last week. What's kind of the theme you're going with your clients these days?
I say two things. One, equities are very highly valued. I don't pick securities, Paul, but I say to investors, clients, be very careful what you pick, because you want to be sure that the security characteristics are good enough for you to be very highly invested in equities. That's one. Second, on the fixed income side, I say to them that you have a situation when bond yields could increase and you could have a loss. And if that's the case, you want to reduce the duration of your fixed income presence, whether you are in US Treasuries, high-grade corporate bonds, or you are in municipal bonds, you want to reduce it. So that's the second one. And if you want to add a third, I would say the 60-40 traditional portfolio is no longer holds, and you want to have more alternatives, global real estate, other areas to reduce the amount of risk in your total portfolio.
So, Sri, U.S. Treasury curves have flattened off the back of the move. Inflation and growth expectations as built into nominal U.S. Treasury yields have risen. Talk to us a little bit about your expectations regarding U.S. monetary policy and the Fed. I mean, what are your thoughts on December and as we look ahead into next year?
I am to make my bias very clear. I said the September 18th, the Fed should not have cut interest at all, let alone a 50 basis point cut. I did not want to reduce it. And I've written about it. And once that happened, I'm not at all surprised that long-dated yields have risen as a result of that. And then the Fed cut interest rates again last week. The expectation is that December there will be a cut unless later this week we find out the consumer price inflation is way out of control. Anything manageable, I think Powell and his colleagues are going to cut rates again in December. And that in turn would be welcomed by the president-elect as something positive. The negative is going to come for Fed policy, I believe, in 2025. And I'm assuming that Powell will continue to remain in office until May 2026. There will not be a danger to his position. He's going to lead the Fed. And if that's the case, 2026, he has to deal with the fact that with inflationary expectations up, because he has put so much of cash into consumer pockets, that he has to deal with higher long-term yields and how he is going to monetary policy. Cuts in rates may come to an end or even necessitate an increase in interest rates during 2025.
Sri, just finally, we've seen a big move higher in the U.S. dollar. How much farther do you think that has to go?
The US dollar could go up a lot further depending on Trump policies. Let me give you an example. If he does go through with the campaign promise of a 10% tariff on all countries and a 60% tariff on 60% tariff on China, expect the dollar to strengthen massively. For example, we are below $1.07 this week, the lowest since June. I can see the dollar going below parity, meaning less than $1 to buy €1 if you are going to be imposing a tariff on all the countries. That's how serious it is. And if Trump wants a weak dollar as well as tariffs, he cannot have both of them. He has to choose.
Very good. Sri, thank you so much for joining us there. Always appreciate getting a few minutes of your time. Sri-Kumar, he is the president of Sri-Kumar Global Strategies out there in Los Angeles. With our news in New York City, here's John Tucker.
All right, Paul. President-elect Trump has named Marco Rubio to be his Secretary of State. Now, Bloomberg's Jody Schneider reports the Florida senator is a bit of a surprise choice.
He and Donald Trump have famously, tussled in the past when they were on that debate stage in 2016 together. And also, Marco Rubio hasn't always, supported him, but he has in recent years. And of course, being a loyalist is hugely important to the former and soon-to-be president again.
Well, Bloomberg's Jody Schneider reporting from the nation's capital. President-elect Trump plans to name South Dakota Governor Kristi Noem to be Secretary of Homeland Security. Trump rewarding loyalists with cabinet positions 1 week after the election. And the president-elect has picked several sitting members of Congress to fill out his cabinet, but Republicans still on track to hold on to a razor-thin majority in the House. So far, the Associated Press has called 214 races for the GOP, 205 for the Democrats. There are 14 races left to be decided. 218 seats are needed to win the majority. German Chancellor Olaf Scholz's Social Democrats and opposition lawmakers have reached an agreement to hold an early federal election February 23rd. Europe's largest economy was plunged into political uncertainty last week after Scholz fired the finance minister, Christian Lindner, of the Free Democratic Party. That broke up the governing coalition in a dispute over borrowing money to boost military support for Ukraine. And finally, this one going viral. Always like to check out what's hot on the web.
Okay.
It's being called the worst ever answer on Wheel of Fortune. The contestant, Will Jordan from Connecticut, solved a pretty good portion of the word puzzle, and it was pretty obvious, even to casual observers. The answer was, give yourself a round of applause. But to groans of the audience, the veteran police officer delivered the answer, treat yourself a round of sausage. I mean, he admits he just kind of blanked out. Wheel of Fortune.
That's tough.
Anyway, global news, 24 hours a day, whenever you want it. With Bloomberg News Now, I'm John Tucker, and this is Bloomberg. Damian, Paul, Lisa.
All right, John Tucker, thank you so much. We appreciate that. Damian, what are you looking at here today? What gets your attention?
Well, I mean, just how quickly some of these cabinet appointments have come out. I mean, I'm really waiting to hear something on U.S. Treasury Secretary, Defense Secretary. I know Mike Rogers' name has been tossed about. CIA Director is another one. There's still a long way to go. And Look, I mean, RFK Jr., he is an anti-vaxxer, and they just named him to, social services or something like that. So, or I don't know if it's been confirmed, but, again, fast and furious with the cabinet appointments, and, the impact on the market is palpable.
Yeah, well, we're going to get some more color on that coming up. We're going to check in with Wendy Benjaminson. She's a senior Washington editor with Bloomberg News. We'll ask her to kind of opine on kind of what we're seeing so far from some of these appointees from President Trump to his cabinet and to some of these positions that are being labeled as czars, like immigration czars. So what does that mean for the policies going forward? Looking at these markets here, we kind of got a mixed market, not a whole lot happening with the index level here. The S&P 500 up 6. Dow up 112, the NASDAQ up 13, so we'll keep an eye on that. Yields, 10-year Treasury yield, 4.37%. That's up another 6 basis points here. So yields continue to move higher. The dollar, the Bloomberg Dollar Index, higher yet again, the strong dollar. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Bloomberg Interactive Broker Studio. I'm Lisa Mateo. Stocks right now, well, we're seeing some green on the screen. This is after a rally that drove stocks to a series of all-time highs. Traders just awaiting key inflation data this week, as well as more clues on President-elect Donald Trump's transition to presidency. After the S&P 500's biggest 5-day run in a year, well, it's now little change, up about 4 points at 6,005. We have the Dow up 0.1%, 65 points at 44,360. The NASDAQ, little change, up 5 points at 19,303. The 2-year yield, 4.32%. That's up 6 basis points. The yield on the 10-year, 4.36%, and that's up 6 basis points. We have shares of Home Depot. They're up nearly 1%, and this is on its best sales in nearly 2 years. It said bad weather really helped boost those DIY sales. And then you have shares of Hertz. Well, they're lower, down 10%. This is after losses wider than expected again. That was due to its failed bet on Tesla EVs. And Tyson Foods, their shares up about 8%, forecasting higher earnings in 2025. The turnaround in the chicken business, rising demand for prepared foods that really help offset those losses in beef. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so go over to youtube.com and search Bloomberg Podcast. As Damian was just mentioning, we're getting appointments for the new administration, kind of fast and furious here. Let's get the lowdown here. We'll go to Wendy Benjaminson. She's a senior editor for Bloomberg News. She's based in our Washington, D.C. bureau. Wendy, loyalty to President-elect Trump seems to be one of the key criteria for being named to his administration. What do we know so far?
Well, you're absolutely right, Paul. I mean, loyalty seems to Trump with a small t, seems to Trump experience or any of other consideration, really, including taking people from the House of Representatives, which is set to have a very narrow Republican margin, Republican lead, and yet he is pulling House members out for National Security Advisor Michael Waltz, Lee Stefanik for UN Ambassador, and those will, the Florida position that Michael Waltz holds will likely be replaced with a Republican, but in a New York special election, you never know what's going to happen. But yes, loyalty seems to be the key factor here.
Wendy, Donald Trump is going to drill, baby drill. Lee Zeldin, head of the EPA, he's going to redraw national monument boundaries. He's going to pull out of the Paris Climate Accord. We're going to drill in Alaska. I mean, is this all real? Is this all happening?
Well, he's certainly setting it up to all really happen. Lee Zeldin, another one who does not have any particular experience with the environment or energy, not from the energy business or the oil business or anything like that. But we know he is a loyal Trump lieutenant and a real MAGA conservative. So he will certainly want to carry out those policies to the extent that he can without Congress. But the way Congress is looking, yeah, I think, we're going to have a trifecta Republican government, and fossil fuels and traditional energy will be back in the forefront.
Wendy, is there any expectation yet forming in Washington as to what the president really wants to get done in this first 100 days, which traditionally have been an opportunity for a new administration to really get things done?
Well, we're reading the tea leaves here at this point, but I think the fact that his first appointments were border czar, a deputy White House chief of staff who is an immigration advocate, or anti-immigration advocate, I should say, Stephen Miller, and Tom Homan, there. And the energy and the EPA appointments, those seem to be his top priorities. Will be the border, and will be starting to roll back some of the clean energy advances that the Biden administration made. He's named those first, so that seems to be where he's going. We do expect, he has named a Secretary of State, Marco Rubio, a senator from Florida, and we've seen reports that Kristi Noem, the South Dakota governor, will be named to be Homeland Security. So it looks like he really is going on the immigration route hard.
Wendy, we've heard from a lot of analysts this morning. I mean, the Trump cabinet appointments, China hawks, Israel supporters. But what about Ukraine? Talk to us about some of these appointments and what this all means for Ukraine.
It probably means the end of U.S. aid to Ukraine and some sort of negotiated deal. The Republicans in Congress were getting itchy about sending more and more U.S. funds to Ukraine. In truth, Ukraine has been in a stalemate with Russia for some time. They don't seem to be progressing. Neither side seems to be progressing. And there are many people, even some Democrats, who worry that that the U.S. is just sending more and more money into a war that's not moving. So now he certainly has the runway to begin to end U.S. assistance to Ukraine, and he and Elon Musk have already spoken to Putin, and we'll see what sort of deal, as he promised he would make a deal with Putin that Zelensky may or may not be happy with, the Ukrainian president Zelensky may or may not be happy with, but that seems to be where we're headed.
Wendy, is there any concern in D.C. about potentially a lack of checks and balances on this White House, given that the Senate is Republican, the House leaning that way, and then even the Supreme Court has many, 6-3 usually for the conservative side. Is there concerns about checks and balances on this administration?
Well, as far as I can tell, there are no checks and balances on this administration from the way you describe it. There's a narrow majority in the Senate. There's a narrow majority, looks like, in the House. There are, as you noted, there's a conservative Supreme Court with 3 of his appointees. We're seeing some reporting that Sam Alito isn't going anywhere, so that conservative justice remains in place. And so Trump has spent the last 9 years remaking Washington in his image, and the way this administration is shaping up seems to point to a completion of that process. And, now what Trump wants will likely happen.
Wendy, do you see potential for the U.S. to supply Taiwan with F-35 fighter jets and Aegis destroyers? Wouldn't Beijing view that as some sort of an escalation there?
I'm sure they would. I'm not sure what's going to happen with Taiwan. Taiwan is a little more trepidatious than they were the first time with Trump. They're not exactly sure where he is going to go with this. I'm not sure that's at the top of his priority list, although he did name a China hawk, Michael Waltz, as his national security advisor. So that could happen. But I think it's too early to say. Wendy,
President Trump is one that likes to make deals, bilateral deals. Does he believe, or does his administration, a growing administration, believe that it can cut a deal with China?
It might. It very well might. I don't think we're there yet, though. I think he needs to get his team in place, see what he wants to do, probably name an ambassador, and and round out his national security team. We still haven't seen the intelligence agencies selected yet. We'll have to see where that goes. But I don't think we can now predict a deal with China or not yet.
And what about some of the people that are currently in place, like Michael Barr? I mean, we know Chair Powell's probably in the seat until 2026, but his time is limited as well. I mean, any thoughts on some of the financial sector appointments, Treasury Secretary, et cetera?
Well, we do expect the Treasury Secretary to come as soon as today. My colleague Saleha Mohsen has reported that Scott Bessent is the one that Trump's advisors are pushing for that. We certainly understand that the replacements at the Securities and Exchange Commission, the Federal Trade Commission, will all take a much lighter approach to regulation than their predecessors. I think you're going to get what you expected to get when Trump was elected.
Wendy, thank you so much for joining us. Wendy Benjaminson, she is the senior editor for Bloomberg News down in our Washington, D.C. bureau. It'll be interesting to see, Damian, what gets done, if anything, between now and Inauguration Day from the Trump camp, I guess is the term, until sworn in. And then that first 100 days, which again is when an incoming president can really have some impact.
And reports that Donald Trump Jr. is not going to be, having a position in government. He's going to be joining a VC firm, I believe. And, that's kind of interesting also, right? Because we know what a role his children played during the first term. Sure. So, look, it's all kind of happening around us. Really quite interesting, Paul. And look, Scott Bessent, wow. Soros, right? Wow. Imagine a former Soros fund manager having a place in this administration. Go figure.
Yeah, crazy bedfellows here. Looking at these markets here, not a lot of big movements here. The S&P 500 pretty much unchanged. Same for the Dow. The Nasdaq's up about 0.1%. 10-year Treasury yielding you 4.36%. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. This is Bloomberg.